So let's start with income from the head, salary. And it is the first head of income that we are about to discuss. For the upcoming examination, they might come up with some questions in relation to this chapter as well. So, being the first head, let me go back to the intro. Do you remember what do you call as an income? All types of revenue receipts plus specifically provided capital receipts are normally called as what? Income. If you can call a receipt as an income, then what is step number 2? You need to check whether an income is taxable in India. How do you check whether an income is taxable in India or not? Very simple. You check the residence rule as well as the source rule. And you tell me what is the residence rule? Taxing an income according to the residency status of a person is said to be what? Residence rule. And what is source rule? An income is taxed in India if it is accrued in India or first received in India. Is said to be what? Source rule. Are you all with me? So if an income is taxable in accordance with either residence rule or source rule, then we can say that income forms part of scope of total income. Once the income forms part of scope of total income, we need to process that income under 5 heads. Are you all with me? Which all are the 5 heads we have? Salary, house property, PGBP, capital gain and IFRS. These are the 5 heads we have, and we are about to discuss first head, that is salary. That is the first head that we have to discuss. It is called as what, friends? Income from the head, salary. Now you tell me, if an income, you have received an income on account of employer, employee relationship. If you have received an income on account of what? Employer, employee relationship, then we can put that particular income to be processed under the head salary. Very simple. If an income is on account of what? Employer, employee relationship, then that respective income have to be processed under the head salary. Are you with me? So this is what we are about to discuss in this respective head. Which all are the components of salary, or what are the other items that we have to process under the head salary? So without wasting time, let's straight away go into the chapter. And before that, you should understand every head of income will have a charging section. Are you all listening? Every head of income will have what, friends? A charging section. So let's understand which is the charging section for the head salary. That is said to be section 15. Section 15 is the charging section for the head salary. It says salary due or paid in advance or arrears of salary, everything will be processed under that respective head. So charging section says salary due or paid in advance or arrears of salary, whatever you have must be processed under the head income from the head salary. Are you all here? Now, let's move on to the meaning of the word salary. What do you mean by salary? Basic salary, allowances, perquisite, commission, bonus, pension, gratuity, provident fund, etc. can be called as what, friends? Salary. In simple terms, we can say whatever payment that a person gets due to the employer-employee relationship can be commonly called as what? Salary. The components are basic salary, allowances, perquisites, commission, bonus, pension, provident fund, gratuity, leave salary, etc. We can list n number of components under the head or under the definition of salary. And we will discuss each and every component separately, and we will understand what exactly is the taxability of each and every component. Are you with me? Now, moving on. Salary, that is payment under employer-employee relationship, perquisite, profit in lieu of salary, everything will come under the section 15, that is meaning of salary. From the head salary, you can claim 3 types of deductions. Number 1, standard deduction. Number 2, deduction for entertainment allowance. Number 3, professional taxes. This will be the last item that we are about to discuss in this particular chapter, section 16. So, this is the eagle's view of this particular chapter. What all are the components of salary? What all are the deductions that you claim from the salary? And what all are the exemptions, other thing that we are about to claim from this respective income component? Are you all with me? So without wasting time, now let's move on to each and every component right now. So you tell me, an income is taxable in the previous year. Yes or no? An income not taxable, we can say an income accrued in a previous year. You have to compute the taxes in the assessment year. Are you all with me? So what department says is basis of charge, section 15. What department says salary is taxed either on due basis or receipt basis, whichever is earlier. Salary is taxable either on what basis? Due basis or on receipt basis, whichever is earlier. What is due basis? What do you mean by due basis? So friends, the point is very simple. Due basis simply means if you have accrued that salary, you have earned that salary, whether it is received or not, it have to be assessed in the respective previous year. I'll give you an example for this. Listen, say your relevant previous year, say 2024-25. 2024-25, say March 2025. March month salary you received on 15th April 2025. March month salary you received on when? 15th April 2025. You tell me, say March month salary was rupees 1 lakh. March month salary was how much? Rupees 1 lakh. You tell me, in which year this 1 lakh will be taxable? Either in 24-25 or 25-26. It is in 24-25, not in 25-26. Why? Because 24-25, March 2025 means it's a part of 24-25. Yes or no? March 2025 is a part of which year? 24-25. You have accrued that particular salary in 24-25. On 31st March, the salary will become due. On 31st March 2025, salary will become what? Due. But you have received it on 15th April 2025. That means which year? You received it on 25-26. Doesn't matter. You have to pay taxes for this 1 lakh in the year 24-25. Why? Because departments say salary will be taxable in the year in which either it becomes due or receipt. Whatever happens earlier. Are you all listening? Are you all listening? Due means what? What do you mean by due? You have done the services but not yet received. Are you with me? Due actually means you have done the services. You have the right to receive that income, but it haven't received yet. That is said to be what? Due. You have done your services. Oh March, till 31st March 2025, you have completed your part. From that moment itself, you are eligible to receive the salary. But you didn't receive the salary. It received only on 15th of April 2025. Doesn't matter. You have to pay taxes in 24-25 itself, because in this example, it becomes due on 24-25. It received on 25-26. So you have to pay the taxes whichever is earlier. So you have to pay the taxes in 24-25 itself. Are you all with me? Are you all with me? Have you understood what I said? Point number 2. Say one more thing. Say 2024-25. Say today is 15th March. 15th March 2025. I received April's salary. I've received April's salary. April 2025's salary as an advance. As an advance. On 15th March 2025, I received April's salary as advance. Now you tell me, which is the year of taxability? For this 1 lakh, whether it is taxable in 24-25 or 25-26. Tell me friends, whether it is taxable in the year 24-25 or 25-26. It will be taxable in the year 24-25. Why 24-25? Because you have received it in advance. That's what I said. Salary is taxable in which year? Either on due basis or on receipt basis, whichever happens earlier. Have you understood what I said? Say I'm receiving 2 months salary as an advance this year. I have to pay taxes in this year itself because I've received that entire 2 months salary as an advance, or I'm receiving this year's salary next year, doesn't matter. Once it is accrued, I'm supposed to pay taxes for that. Are you all with me? Have you understood the concept? So section 15, basis of charge says salary is taxable in the year either on due basis or on receipt basis, whatever happens earlier or whichever happens earlier. I hope you understood the concept. Moving on. There are a few things that you should know in relation to the basics of this chapter. First one is advance of salary. So can you read that particular point? Advance salary is taxable when it is received by the employee, irrespective of the fact that whether it is due or not. That's what I said. Advance of salary, April month salary, if you are receiving it as an advance in the year 24-25, you must pay taxes for that respective salary in which year? 24-25 itself. Have you understood what I said? Great. Moving on. What is next? Advance against salary. What do you mean by advance against salary? What do you mean by advance against salary? You are taking a loan. You are taking a loan against the salary. Are you all here? You are taking what? A loan against salary. Now that repayment will automatically happen from your salary. That means the employer will deduct a portion of your monthly salary as a repayment of loan. Are you with me? In such a case, what will happen? When an employee takes a loan from his employer, which is repayable, in certain specified installments, then the loan amount cannot be brought to tax as salary of the employee. So friends, the point is very simple. If you are taking a loan against a salary, that amount that you have received is not salary, that is only a loan. If you are taking a loan against a salary, that loan amount will be never considered as a part of your salary and nothing shall be taxable. Are you with me? Are you with me? So both the concepts are different. Advance of salary and advance against salary, both are different. Advance of salary means what? Next month's salary you are getting as an advance this month. That is fully taxable whenever it is received. But loan against salary, if you are taking a loan against what? Salary, then that loan is not your income. That is not your salary. And hence that loan amount that you are taking will not be taxable under the head salary. Are you with me? Perfect. Now there are two notes under this particular thing. Let's understand both the notes. What is note number 1? Where any salary paid in advance is assessed in the year of payment. Alright, listen. So what was the payment what was the point that we are discussing? Where any salary paid in advance is assessed in the year of payment, then it cannot be subsequently brought to tax in the year in which it becomes due. What does that mean? Next year, April month salary I have received as an advance this year. Then that salary will be taxable in this year. Then again in April, that same amount cannot be taxed on account of due again. Why? Because it is already taxed on the basis of receipt. Thereafter, you cannot tax it again on the basis of due. Are you with me? So these are the basics in relation to salary. And one more note is there. Can you read the last note? If the salary is paid in arrears, has been assessed on due basis, the same cannot be taxed again when it is paid. What is arrear? It is accrued but not received, just like outstanding salary. Once it is due, you have to pay the taxes. Then again on receipt basis, it cannot be taxed again because there is no double taxation for the same income component. Are you with me? Once it is taxed on the basis of due, then it is not again taxed on the basis of receipt. Once it is taxed on the basis of receipt, then again you cannot tax it on the basis of due. Are you with me? Have you understood the concept? So tell me friends, the concept of salary is very simple. The main takeaway from this particular area that we have discussed till now is salary will be taxable either on due basis or on receipt basis, whatever happens earlier. This is what is the main takeaway from this section 15. Are you with me? Moving on to some of the other points in relation to this. These are just basic things, okay? These are just basic things that we are discussing. What is point number 1? We will discuss some other notes. I want all of you to read the other notes one by one. Can you read the first note? The contract of service. It is a concept called contract of service. Let's understand what exactly is that. Can you read the note? The employer can direct and control the duties and the manner of the performance of the employee. Hence, employer-employee relationship exists in such contract and the payment taxable under salaries. Very simple. Contract of service means it's an employment contract. If you are receiving any payment based on contract of service, definitely the payment shall be taxable under the head salary. Why? Because it is called as what? Employment contract. Are you with me? Now there is one more thing called as what? Contract for service. What do you mean by that? Contract for service. What is that? The contractee can simply decide and quote the object and the target to be achieved, but cannot decide and direct the manner of performance and taxable under PGBP. I'll give you simple 2 examples. Are you all listening? Say for example, I'm a company. This is a company. Okay, ABC Limited. The company have an HR manager. The company have what? An HR manager. The company will clearly say that how exactly that HR functions to be performed. What are the things that they have to do? What are the things that they are not supposed to do? Then the company will interfere in the day-to-day work of that HR manager. So the contract between the company and the HR manager is said to be what? Contract of service. And the payment given by the company to the HR manager shall be called as what? Salary. And hence it will be taxable under salaries. Are you with me? The same company appoints an auditor. The same company what? Appoints an auditor. The company will say that we need a tax audit or a statutory audit report. How to conduct the audit? What all are the things that should do? They shouldn't do. That is decided by the auditor, not the company. Are you with me? So in such a situation, we can say that it is a contract for service and it's a professional service done by the auditor to the company, and the payment given by the company to that particular auditor shall not be taxed under salary. It will be taxed under PGBP. Why? Because for the auditor, it's a professional service and the amount that he gets will be assessed under PGBP, not under salary. Are you with me? So there are 2 words. Number 1, contract of service. It's an employment contract. Hence, whatever amount that you receive under a contract of service shall be fully taxable under the head salary. Now, what is the second word? Contract for service. What is that for service? It's a professional contract. It's not an employment contract. It's a professional contract, and hence the amount received under that respective contract shall not be taxable under the head salary. Rather, it will be taxable under the head PGBP. And what is the full form of PGBP? Profits and gains from business or profession. It is called as PGBP. Are you all with me? Are you all with me? Again, basic things. Now, moving on to the next thing. What is the next thing? Can you read the main heading? Agent and principal relationship. So tell me, friends, what do you mean by principal agency relationship? We will call it as PA. Principal agency relationship. Tell me, what do you mean by principal agency relationship? Agent actually acts on behalf of principal. Yes or no? Certain places principal cannot go directly and does the service. So the agent will be the face of principal. You tell me, you have studied that principal agency thing and all. Maybe in your foundation. Yes or no? Now, tell me, friends, is the agent an employee of principal? Is an agent employee of principal? Normally, no. Agent cannot be called as what? Employee of the principal. They are PA, principal agency relationship. So whatever commission and remuneration paid by the principal to an agent is not assessed under the head salary, because agent and principal does not have normally an employer-employee relationship. Are you with me? If it is your employee, then it is not your agent, it is your employee only. So what they are saying is any commission or remuneration earned by agent is not taxable under the head salary, because an agent is not an employee of his principal, and it will be taxable under which head? PGBP. If an agent receives some commission or remuneration from the principal, that will be assessed under which head, friends? That will be assessed under which head? PGBP. And what is the full form of PGBP? Profits or gains from business or profession. So PA will be under PGBP. Why? Because there is no employer-employee relationship. Moving on to the next basic thing. What is the next thing? Salary paid to a partner by a firm. Imagine you are a working partner of a partnership firm. You are what? You are what? Working partner of a partnership firm. Are you the employee of that partnership firm? No, you are one of the owners of that particular partnership firm. Even though we call the payment as salary, there is no employer-employee relationship between the partner and the partnership firm, and hence whatever salary paid by a partnership firm to its partner shall not be taxed under the head salaries. Rather, it will be taxable under where? PGBP. That's what the department says. Even though the payment is called as salary, since there is no employer-employee relationship between a partner and a partnership firm, whatever remuneration or salary received by a partner from a partnership firm shall be assessed under which head? PGBP, not under salary. Are you with me? So let's read that particular theory. I want all of you to read that theory along with me. So, any salary, bonus, commission or remuneration, etc. paid by partnership firm to its partner is not taxable under the head salary, because relationship between the firm and its partner is not that of an employer-employee and taxable under PGBP. Even though you are a working partner of a partnership firm, you don't have an employer-employee relationship, and hence the income shall not be taxed under the head salary. Rather, it will be taxable under the head PGBP. Are you all with me? So whenever you hear the word salary, don't jump into conclusion. It is taxable under salary and all. What is the thing that you should consider? Whether there is an employer-employee relationship. If there is, then definitely under the head salary. Otherwise, it should be under the other heads. Most probably under PGBP. Are you all with me? Now, what is the next point? Salary received by proprietor. What do you mean by proprietor? Say, I am a sole proprietor. I am a proprietor and I am taking salary from my business. I run a shop. Imagine I am running a shop. Every day I go to shop. So in the year end, I used to draw a salary. Are you with me? Now you tell me whether that amount drawn by me called a salary is taxable under salary or not. Is it taxable under salary? No. Why? It is normally called as drawings. It is my profit only. And that will be assessed under PGBP. So no. I myself am running the business. I am earning profits. I have to pay taxes under PGBP. When I am withdrawing the profits from my business, do I have to pay taxes again? Do I have to pay taxes again? Not possible, not required at all. And hence we can say that if a salary received by a proprietor from a proprietorship firm is not an income, it is not at all an income from the perspective of income tax law, because for that profit you have already paid taxes under PGBP. Whenever you are drawing that profit again, you don't need to pay any taxes extra. Are you with me? Are you with me? Imagine I'm running a shop. I have some profits. The profit of the shop will be assessed under which head? Profits or gains or business or profession. Now I have some profits in my books. I'm drawing that profits for my personal purpose. For drawing that profit, again, should I pay taxes? No, because already taxed under where? PGBP. And again, that drawings is not taxable under Income Tax Act. So whenever you see drawings from a sole proprietorship, you should consider that it is not at all a taxable income, because that drawings means what? Either your capital or your profit. Capital is not at all a taxable income. and profit is already taxed under PGBP. So whenever a proprietor draws amount from a proprietorship business, that is never considered as an income, salary. Are you all with me? Have you understood the concept? Don't by heart it. Rather, why it is not taxable? It is already an assessed profit. I am simply withdrawing the profit. It is not my earned income. Have you understood? Perfect. Now, as proprietor and proprietorship firm are the same person and no one can earn from himself, hence not taxable. Why no one can earn himself? I myself is doing that business. It will be like I'm taking amount from this pocket and putting it under pant pocket. Okay, that simply means it is my profit only. I'm withdrawing it. It is not another earned income. Are you all here? Perfect. Now, moving on to the next one. What is the next concept? Can you read that? Remuneration to director. Let's see. Treated as salary only if director is the employee of the company. Now, let me ask you one interesting question. Is the director of a company employee of a company? Is the director employee of a company or a hired professional? So if I ask you whether a director is the employee of the company, the answer should be like this. See, a director can be an employee of a company. Normally, the whole-time directors and managing directors are the employees of a company. But independent directors, nominee director, alternate director, etc. can never be an employee of a company. Are you with me? So the point income tax department says very simple. If a director is getting some remuneration from a company, you check whether the director is an employee of the company. If he is an employee, then that remuneration received shall be taxable under salary in the hands of whom? Director only. Are you all here? Don't get confused. Income tax is a tax on income of the income recipient. For the company, it's a cost. For the director only, it is an income. And hence the director have to pay the taxes. Are you with me? Perfect. Now, treated as salary only if director is a employee of the company, otherwise taxable under PGBP or IFOS, depends on facts of the case. That's what the department says. I hope that point is clear for you. Moving on to the next one. Remuneration received by MP, MLA. What is MP? Member of Parliament. What is MLA? Member of Legislative Assembly. The MPs and MLA will get salary. These MPs and MLA will get what? Monthly salary, allowances, etc. etc. Is it taxable under the head salary? Say I am an MP. Say I am an MP. I am receiving salary. Is it taxable under the head salary? The answer is no. Why? Because these MPs and MLAs are not the employees of any legislature. They are only our elected representatives. And hence there is no employee relationship between an MP and MLA with our legislature. Are you with me? And hence we can say remuneration received by member of parliament or state legislature is not taxable under the head salary. As such, person is not government employee. Such income would be taxable under where? IFOS. What is the full form of IFOS? Income from other source. So the point is very simple. If an MP or MLA is receiving what? Remuneration, that the remuneration is not taxable under where? That remuneration is not taxable under the head salary. Rather, it will be taxable under which head? Income from other source. Great. And moving on to the next one. Can you read the next one? Pension received by legal hire. Say for example, I'm an employee, I got retired and I'm getting some pension. I'm an employee, I got retired and I'm getting what? Pension. Is that pension taxable under the head salaries? Is that pension taxable under the head salary? Yes. Why? Because that pension have an employer-employee relationship. This employer-employee relationship can be past, present or future. What is that? From next month onwards, I will join as an employee of your company. Give me 2 months advance salary. That advance salary that I'm getting is on account of future employer-employee relationship, and hence it is fully taxable under the head salary. I'm your employee right now. Give me amount. That amount I am getting is also taxable under the head salary due to the present employer-employee relationship. I was your employee. Right now I got retired and I'm getting what? Pension. That pension is also taxable under the salary due to past employer-employee relationship. Are you with me? So the payment that you're getting, whether it have a connection, that is employer-employee relationship, either in past or in future or presently, if in all the permutation combination, that receipt will be taxable under the head salary. Are you with me? That's what I said. The relationship can be present, past or future. Are you all with me? Perfect. So coming back to the point, my point is not yet over. So I am an employee, I got retired, I'm getting pension from my company. That pension will be definitely taxable on the head salary. Are you with me? After my death, my legal hire is receiving some pension. Widow pension and all will receive. After my death, my legal hire is receiving some pension. Now you tell me whether that pension is taxable under the head salary. You have to think from the perspective of legal hire. Whether the legal hire and the employer have an employer-employee relationship? No. Only the, employee who died have an employer-employee relationship. His legal hire does not have an employer-employee relationship. And hence what to do? It will be taxable under which head? IFOS. It will be taxable under IFOS. So let's see that point. Read that. Pension received by widow or legal hire, not taxable as salary, as no employer-employee relationship exists between the payer and the paid. However, such amount shall be taxable under IFOS. It have to be assessed under income from other source, not under salary. Are you all with me? Perfect. Moving on to the next concept. These are just basics, okay? They may test all these things in the exam. They will give these items as an adjustment. Then you have to process it under IFOS, not under the head salary. If you process it under the head salary, you will lose your marks. You don't need to by heart this. Will you understand the concept? Why it is not taxable under the salary? If you get it, done. You don't need to by heart it again. Are you with me? If you start by hearting everything, it is very difficult actually, because every year it keeps on changing. It's impossible for any person to by heart everything, especially in IT Act. So it is always better to why. Always ask why. That will be better. Now, moving on to the next one. What is the next one, friends? Salary of judges. Okay, let's see. Remuneration received by judges is taxable under the head salary. This is the only one exception where there is no employer-employee relationship between the judiciary and judge. Actually, judge is not an employee of judiciary, but still it is taxable under the head salary. This is the only exception where, even though there is no employer-employee relationship, that that remuneration received by a judge from the judicial system is taxable under the head salary. Are you with me? So what is the point? Remuneration received by judges is taxable under salary, even though they are not having an employer-employee relationship. Even though they are not having an employer-employee relationship, it will be taxable under the head salary. Are you with me? Yeah. So moving on to the next one. What is the next one? Forgoing of salary. Read that. Forgoing of salary. What do you mean by forgoing of salary? Let's see. Once salary accrues and subsequent behavior by the employee does not absolve him from the liability to income tax. What do you mean by that? What is forgoing? What do you mean by forgoing? See, forgoing of salary, I'll give you an example, okay? I've worked in a company, okay? I've worked in a company. The company is about to give me 2 months salary. The company is about to give me what? 2 months salary. we can say salary is outstanding. It is due but not received. I told the company I don't want salary. I told the company what? I don't want salary. You use it for some charitable purpose. You take that salary. I don't want to take that, receive that salary. You use that salary for some charitable purpose. It is called as what? Forgoing of salary. What is forgoing now? You tell me. Forgoing something like you have earned it, but you are saying that I don't want to receive it. You're waiving the right of receipt. Are you with me? That does not absolve you from your income tax liability, whether you are receiving it or not. We don't care. You earned it, pay the taxes. Whether you want to receive it or not, that is your wish only. Are you with me? Are you with me? So even if it is forgone, you have to pay the income tax. That's what the department says. Are you with me? Are you with me? Let's read that point again. Once salary accrues, the subsequent waiver by the employee does not absolve him from the liability to income tax. That's what the department says. Moving on. Moving on with the next concept. What is that? Surrender of salaries. What do you mean by surrender of salary? If an employee surrenders his salary to the central government under Section 2 of Voluntary Surrender of Salaries Act 1961, then the salaries so surrendered would be exempt while computing his taxable income. Listen, there is a concept called surrender of salary. It is done as per Voluntary Surrender of Salaries Act 1961, Section 2. Are you with me? If you are officially surrendering the salary in accordance with the Voluntary Surrender of Salaries Act 1961, then that surrendered salary, you need not pay any taxes. Simply foregoing the salary, you need to pay the taxes. If you are officially surrendering the salary in accordance with the Voluntary Surrender of Salaries Act 1961, don't worry, no to pay. You don't have to pay any taxes. Are you with me? So if you have plans to forgo the salary, then you have to do it officially under Voluntary Surrender of Salaries Act 1961. Otherwise, the entire salary that you are foregoing shall be fully taxable. Are you with me? If you are surrendering it, you have to officially surrender it. Otherwise, definitely you have to pay the taxes. Are you with me? Great. Moving on to the last point. What is that? Part-time employment. Say, imagine I'm a part-time employee of a company and I'm receiving some amount. Is that taxable under the head salary? Imagine and say, think and tell me, I'm a part-time employee of a particular company and I'm receiving some amount. Is that amount taxable under the head salary? Yes, whether it is full-time or part-time. The only one point that you have to check is whether there is a relationship called employer-employee. If yes, it is taxable under the head salary. Are you with me? So that's what they are saying. It does not matter whether the employee is a full-time employee or a part-time one. The remuneration receipt shall be taxable under the head salary. Whether you are a full-time employee or a part-time employee, doesn't matter, friends. If you are receiving remuneration, you need to pay the taxes under the head salaries. Are you all here? So you tell me, friends, from the basics, what do you understood? Very simple, two main things. To tax an income under the head salary, the main thing that you should focus is what? Employer-employee relationship. If that exists, then salary will be taxable in a year either on the basis of due or on the basis of receipt, whichever is earlier. That's it. This is what section 15 is all about. Are you with me? We have taken different permutation and combination and explained all the concepts in different permutation and combination, but the concept is one and only the same. Taxable in the year of receipt or due, whichever is earlier, plus there should be an employer-employee relationship. Bus. Are you all here? Are you all here? Perfect. Moving on. Now, when we discuss the taxability, we should consider the exemptions as well. We should study the exemptions as well. And let's study the exemptions now. So, section 10. Can you read the heading? Now, I want all of you to read the heading along with me. So, can you read the heading? Section 10. What is that? Remuneration, received by following individuals are fully exempted. Read it again. Section 10. What is that? Remuneration received by following individuals are fully exempted. So we are about to discuss the exemptions under salary. Following remunerations, you don't need to pay any taxes because it is specifically exempted under section 10. Are you with me? If an income is exempted income, do you have to pay taxes? No, you don't have to pay any taxes. Let's understand which all are the exempted salary incomes. So let's understand this one by one. If you ask me whether it is important, I will not say these are important, but it is there as a part of your syllabus. It is always better to study everything. It is always better to study everything rather than skipping a point. It is always better to study everything. So let's discuss what exactly is the logic behind this point. So can you read the point? Exemption can be claimed only if such individuals are not citizens of India. So to claim this item number 1, 2, 3, 4, you should be a non-citizen of India. That means you should be a foreign country citizen, not an Indian citizen. Indian citizens cannot enjoy this 1, 2, 3, 4 exemption. Are you with me? Are you with me? Only who can enjoy these exemptions? A non-citizen of India only can enjoy these 4 exemptions. And let's understand and let's go through exemption number 1 first. What is exemption number 1? Remuneration received by officials of embassies, etc. of foreign states. An exemption is provided under section 10, subsection 6, clause number 2. This is how you have to read it. It is not 10(6)(ii). Okay. And what is it? Section 10, subsection 6 and clause number 2. That is Roman numeral 2, not II. Okay. Now, let's understand what exactly is that point. So friends, listen. First of all, let me tell this in a very small and easy manner. Listen. Say in India, we have US Embassy office. Yes or no? In India, what? We have US Embassy office. And there will be embassy officials of USA. There will be what? Embassy officials of USA. Working for the benefit of the country USA. But they are working in India. So their salary is accrued in India. And they have to pay the taxes in India normally. Yes or no? Why? Because even though salary payable by US government, you are providing your services in India. Hope you remember. Salary earned for services rendered in India shall be deemed to be accrued or arised in India according to section 9. Yes, in the last chapter, residency status and scope of total income, we have clearly stated that if you are receiving a salary for services rendered in India, then that particular salary shall be deemed to be accrued or arised in India. And hence all the embassy officials who are even though they are non-citizens, but they are providing the services in India, they have to pay taxes in India. Yes or no? Yes or no? And hence we can say that normally it is taxable, but income tax department say don't worry. If you are a foreign embassy official working in India, for your salary, we are not levying any taxes subjected to conditions. We are not giving a full-fledged exemption. Subjected to conditions, we will give you what? Exemption. Are you with me? Let's understand what all are the conditions right now. So can you read the first point under that? Remuneration received by foreign embassy, high officer, commission, legation, commission, consulate or trade representation of a foreign state or as a member of a staff of any of these officials for services in India is exempted. That means if you are an embassy official or a trade representation of a foreign state, etc., etc., all the remuneration earned by you shall be fully exempted, provided. What are the conditions? Can you read the first condition? The above mentioned members should not be engaged in any other business or profession or employment in India. Obviously, if you are an embassy officer, you should do what? That work only. You are not supposed to enter into any business, profession or employment in India. First of all, if you enter into other profession in India, they will expel you first. USA will directly expel you. Why? You are coming to India for your business or our business? That means USA will ask you, you are coming to India for the benefit of USA only. Now you are doing a parallel business in India. Not possible. Are you with me? So Income Tax Department also say that that person who is coming as a foreign delegate in India should not have any business, profession or employment in India. Are you with me? Plus, what is the second condition? The remuneration received by our corresponding government officials resident in such foreign country for similar purpose also should be exempted. What is that? It is just like, listen, see, we have an Indian embassy office in USA and there will be Indian citizens working in USA. If USA levy income tax from them, we will levy income tax from your persons working in India. Have you understood? Our embassy officers who are working in your country also should get a similar exemption. Then we will exempt your officials who are working in India as well. If you give exemption for our, then we will get exemption for your. Are you with me? If you give exemption for our kids, we will give you exemption for your kids. Otherwise, no exemption. Are you with me? Are you with me? So the point is very simple. Remuneration received by foreign embassy officers, commission, legation, consulate, trade, representation of a foreign state, etc. is exempted provided subject to two conditions. What is condition number one? The person should not have any business, profession, employment, etc. in India. Apart from this, you should not have any other activity in India. Plus, one more condition. What is that? Indian embassy officials who are working in your country also should be provided with similar exemption. Then only we will give you exemption for your people working in India. Are you with me? Are you with me? Now there is a small correction. This is basically embassy officer and high commission. Okay. This is called as embassy officer and high commissioner. High commission. There is a small clerical alignment error. That is embassy officer and high commission. Okay. Moving on. To the second exemption, let's understand what is exemption number 2. So let's read exemption number 2. Remuneration received for services rendered in India as an employee of a foreign enterprise, which is under section 10, subsection 6, clause number 6. It's not 4, it's 6. V1 is 6 basically. Don't worry. Yeah. So let's understand what exactly is his point. So listen, remuneration received by a foreign national. What do you mean by foreign national? Foreign national. Indian national means Indian citizen. Foreign national means foreign citizen. So remuneration received by a foreign national as an employee of a foreign enterprise for services rendered by him during his stay in India is exempted, provided, what are the conditions? The foreign enterprise is not engaged in any business, trade in India. Condition number 2, the remuneration is not liable to be deducted from the employer's income chargeable to tax under the Act. And what is condition number 3? The employee's stay in India is less than or equal to 90 days during the relevant previous year. What does this mean? For making you to understand this, I'll make use of a small simple example. Are you all listening? Are you all listening? So we'll make use of a small simple example. Listen. Say Rolls Royce RR. Okay, assume that Rolls Royce does not have any operations in India. Assume Rolls Royce what? Does not have any operations in India. They are actually from British, UK. We can say UK. Now, say Mr. India, there is a person called Mr. India. He visited UK. And what Mr. India did is like, he took one of the Rolls Royce car, he imported the car to India. Imported that car to India. Now, as you all know, Mr. India have a Rolls Royce car in India. This is the Rolls Royce car. Okay. Owned by Mr. India. Now, friends, listen. You tell me, does Rolls Royce have any direct business in India? Does Rolls Royce have any direct business from India or in India? No. Why? Because Mr. India went to UK. He bought the car from UK. Then he imported that car to India. Rolls-Royce is not selling any car in India. Yes or no? No. This car had some engine failure. Okay, this car got engine got failed. And Mr. India directly called a Rolls-Royce company and they sent a mechanic. They sent a mechanic to India. So we will call Mr. Mechanic. Mr. M. So Mr. M came to India and he repaired that particular car. Mr. M came to India and he repaired that particular car. It took 2 months for him to complete the repair. 2 months, 60 days. Since it was an engine failure, they had a lot of work and they took how many months? 2 months to complete the entire work. Are you with me? Are you with me? Now, Mr. Mechanic is a pure British citizen. He has no other connection with India. He came to India only for repairing that particular car. Are you with me? But there's a small problem. What is the problem? Mr. Mechanic took 2 months to complete the work. That means his 2 months salary is received by him on account of his services provided in India. Yes or no? He took 2 months and 2 months salary say 2 lakh. His 2 lakh salary he earned from services rendered in India because he have done that repair when he was in India. Are you all listening? He have done that particular repair when he was in India. So we can say that the 2 months salary received on account of services that he have provided in India. Now you tell me, what is the after effect? Normally, Mr. Mechanic is supposed to pay taxes in India for this 2 lakh. Yes or no? Normally, Mr. Mechanic is supposed to pay taxes for this 2 lakh in India. Why? Because services rendered in India. Whether it's received in India or not, he have provided the service in India. Are you with me? Now what department say? Department is saying that if you are a foreign national and you are receiving remuneration from a foreign enterprise, then we will give you what? Exemption. If you are a foreign national and you are receiving remuneration from a foreign enterprise, services rendered by him during his stay in India, then we will give you what? Exemption. Subjected to how many conditions? Subjected to how many conditions? 3 conditions. What is condition number 1? The foreign enterprise is not engaged in any business, trade or any business or a trade in India. Are you with me? You tell me in this example, does Rolls-Royce have any business or trade in India? Does Rolls-Royce have any business or trade in India? No. They are not at all selling any cars in India, but Mr. India went to UK, bought the car and came back. Are you with me? So this Rolls-Royce company does not have what? Any business or a trade in India. So that is okay. What is condition number 2? The remuneration is not, read this, the remuneration is not liable to be deducted from the employer's income chargeable to tax under the Act. The Act means which Act? Income Tax Act. What does that mean? Very simple. If you does not have any business in India, then that 2 lakh rupees salary paid by Rolls-Royce to the employee will not be deducted from any income taxable in India. What is condition number 2? Read that condition number 2. The remuneration is not liable to be deducted from employer's income chargeable to tax under the Act. Imagine, when Rolls-Royce company pays him salary, it is a cost for the company, yes or no? It is a cost for the company. They will deduct this 2 lakh from India only if they have taxable profits from India. Yes or no? Do they have any taxable profit from India? No. So what condition number 2 says? They shall never deduct this 2 lakh from any income chargeable to tax from Income Tax Act. That simply means they should not have any income chargeable to Income Tax Act, or they should not have any income chargeable under Income Tax Act from which they deduct this 2 lakh. It should not be possible. Are you with me? They should not deduct that 2 lakh from any income which is chargeable to or which is chargeable under Income Tax Act. That is better. Which is chargeable under Income Tax Act. In this question, in this example, since they does not have any business in India, they will not have any income chargeable under Income Tax Act. If they don't have any income chargeable under Income Tax Act, they will never deduct the 2 lakh from or 2 lakh as an expenditure from any income. Are you with me? So the point is very simple. They should not claim that 2 lakh as an expenditure under Income Tax Act. Since they don't have any income, they will not claim it as an expenditure as well. That's what they are saying. And what is condition number 3? The employees stay in India should be less than or equal to 90 days during the relevant previous year. You tell me how many days they have stayed in India? Only 60 days, 2 months, and hence all the 3 conditions are satisfied. Rolls-Royce does not have a business. Rolls-Royce have not claimed that 2 lakh as an expenditure from Income Tax Act, plus that employees stay in India is only less than 90 days, and hence we can say the entire 2 lakh is fully exempted as per IT Act. As per Income Tax Act, you don't need to pay any taxes for that 2 lakh rupees receipt. Are you all with me? Are you all with me? So coming back to that particular point, what does that mean? If you are an employee of a foreign enterprise which does not have any business or trade in India, and they are not claiming any expenditure or any deduction for the salary which is paid to you, plus your stay in India is less than or equal to 90 days, then the salary earned by you from India, from that particular foreign country or company, shall be fully exempted in India. Are you with me? So let's read that again. Moving on to the next one, third exemption that we should study. What is the third one? Salary received by non-resident for services rendered in connection with employment on foreign ship, which is under section 10 subsection 6 clause number 8. Let's understand what exactly is the third item or third exemption. What is that? Salary income received by or due to a non-citizen of India who is non-resident for services rendered in connection with his employment or on foreign ship is exempted, provided his days of stay or his total stay in India is less than or equal to 90 days during the relevant previous year. What does that mean? Again, I'll make use of an example to make you understand what exactly is that exemption under point number 4. Listen. Say, what is this? What is this? This is India. Modern India. Okay, wow. Don't call it as amoeba, okay? It is India. And what is this? Territorial waters. Okay, this is territorial waters, and the other one is in India. Oh, you haven't seen the Jammu and Kashmir, huh? Okay, now it is fine. All right. So this is India, and the thing which is over there like a half dosha is what? Territorial waters. Now listen. Say there's a ship coming. Okay. There's a ship coming to India. The ship entered the territorial water, and ship wants to go to Pakistan. Okay. The ship sailed through Indian territorial waters, and they left territorial waters as well. So it took 2 months for the ship to complete the voyage to India. The ship traveled, or they do have some business in India as well. They came to one of the port in India as well. Then they sailed out of the territorial waters. Are you all with me? So in total, they traveled around 2 months through the Indian territorial waters. Are you all with me? Now listen, friends. In the ship there will be what? Crew members. In the ship there will be what? Crew members. This crew member will get salary for every month. Yes or no? But there is a problem with this 2 month salary. What is the problem with the 2 month salary? When the ship is sailing through the Indian territorial water, the crew members are providing the services when they are in India, because the ship is in Indian territorial water. So the 2 month salary, they have to pay taxes in India and go. Yes or no? Yes or no? Say, when the ship enters the territorial water, there are crew members. Yes or no? They are working in the ship. And where is the ship right now? Ship, when they enter the territorial water, the ship is in India. So ultimately we can say that crew members who are working in the ship, and the ship is currently in India, and they are providing their services in India. Because India includes both the landmass as well as 12 nautical miles from the baseline. Are you with me? And what happens for the 2 month salary? They need to pay taxes in India. But the department say no. No need. If your days of stay in India is less than or equal to 90 days, then you are a crew member as well as a non-resident, non-citizen of a foreign ship. Don't pay any taxes for the salary that you have earned up to 90 days. Up to 90 days, nothing shall be taxable. Now let me ask you one question. What if they stayed in India for 95 days? Entire 95 days salary is fully taxable. It is not like 90 days salary exempted and 5 days salary taxable. It is not like that. You need to pay taxes for the entire 95 days salary. Are you with me? So let's read that point again. So can you read that again? Salary received by non-resident for services rendered in connection with the employment on a foreign ship. What is the first bulleted point? Salary income received by or due to a non-citizen of India who is the non-resident for services rendered in connection with his employment on a foreign ship is exempted provided his total stay in India less than or equal to 90 days during the relevant previous year. If he haven't stayed in India for 90 days, don't worry. Now salary, nothing shall be taxable. No part of the salary, you should not pay any taxes for any salary that you have earned during that period of service, if that period of service is less than 90 days. Are you with me? If you want to claim this benefit, you should be a non-citizen as well as non-resident. If you are a citizen, then you have to pay the taxes in India. Are you with me? Are you with me? So we have completed 3 exemptions and we have one more exemption under this chapter. And what is that? Exemption number 4, that is remuneration received by foreign government employees from specified training under section 10 subsection 6 clause number 11. X1 means 11. Let's understand what exactly is that particular point. Can you read the first bulleted point? Any remuneration received by employees of a foreign government from their respective government during their stay in India is exempted provided such remuneration is received in connection with their training in any establishment or an office or in any undertaking owned by the government. Say for example, India officially communicated to USA that they want some services or assistance from FBI. You heard about FBI, right? Yeah. So, Federal Bureau of Investigation. So, Indian government called some of the FBI agents. It is not going to happen first of all. This is an imaginary example. Okay, wow. Now, Indian government called some of the FBI agents to give a training to the CBI over here. So, FBI agents are coming from US for 1 month and they are giving what? Training to our CBI officers. Are you all with me? Now, US government is paying salary to the FBI agents. US government is paying salary to the FBI agent. Okay. Now, this FBI agents received that 1 month salary for the training provided in India. Yes or no? That FBI agent undertaken a training for 1 month and they are receiving salary for that 1 month training that they have conducted in India. Normally, that 1 month salary is taxable in India. But India says no, nothing shall be taxable because it is only for our benefit you come over here and took the training. So we are not that cruel. We have no plans to tax any amount in India. So that's what they are saying. Any remuneration received by employees of foreign government, say FBI, from their respective government, that means from USA, during their stay in India, that means for the training, is exempted provided such remuneration is received in connection with their training in any establishment or office or in any undertaking owned by the government. You have to provide the training for Indian government employees. You are providing to some private organization and all, then definitely we will tax it. If you are providing your training to the Indian government employees, then the salary that the US government paid to the FBI agents when they are in India, nothing shall be taxable. Are you all with me? Have you understood what I said? So there are 4 exemptions that we have learned till now. Let's go through that exemptions again. What was the first exemption? In simple terms we can say. What was that? foreign embassy officers who are providing the services in India. We will give them exemption for the salary they earn in India, subject to two conditions. What is that? That foreign official should not have any other business or profession or employment in India. Plus, our people over there also should get similar exemption. And what was number 2? Remuneration received by a foreign national from a foreign enterprise for their services rendered in India shall be fully exempted, subject to 3 conditions, not 2, 3 conditions. What was number 1? That foreign enterprise should not have any business or trade in India. They should not claim that salary paid as an expenditure from IT Act. And the third one, that employees' days of stay in India should be less than or equal to 90 days. Are you with me? Third exemption. What was the third exemption? Salary received by a non-resident, non-citizen crew member of a foreign ship, provided his days of stay in India should be less than or equal to 90 days. Nothing shall be taxable. And what is the fourth one? Any remuneration received by a foreign government official from their respective government for their training given to the Indian government employees shall be fully exempted. Are you with me? These are the 4 set of exemptions that we have learned till now from the head salary under the section 10. Is that clear till now? Is that clear till now? Now, let's discuss the other things in relation to this chapter, that is section 17. We are about to start the real original discussion. From here onwards, whatever we discuss will be under very, very important category. From this moment onwards, whatever I discuss in this chapter will be under very, very important category, because definitely one of those adjustments which we will discuss right now, definitely it will come in the upcoming examination. It is normally like that. Components, that is the main highlight of this chapter. So, as I've told you, salary including the following. What all are the components of salary? Number 1, wages, bonus, allowances, etc. For that, there is a special note for the bonus. Normally, you tell me, what do you mean by bonus? What do you mean by bonus? Bonus simply means a company earning profit, they have to distribute a part of their profit to the employee. Are you with me? Are you with me? And there's an act called Payment of Bonus Act. There's an act called Payment of Bonus Act. According to the act, every company who's in profit must distribute a minimum as well as a maximum bonus to the employee. It is mandatory. Are you all here? Now, for the employee, the bonus received is one of the taxable component under the head salary, because it's on account of employer-employee relationship. But you tell me, normally the salary is taxed either when it has become due or the year of receipt, whichever is earlier. Yes or no? Except for bonus. What is the specialty for bonus? Bonus taxable only on receipt basis, not on due basis. If you are receiving bonus, that bonus is taxable only on receipt basis, not on due basis. Bonus is not taxable on due basis. It is only taxable on receipt basis. Are you with me? Say, for example, last year bonus I have received only this year. In the year of receipt only it will be taxable. Apart from bonus, all other components of salary are taxable either on due or receipt, whichever is earlier. Only for bonus, it is taxable in the year of receipt only. Are you with me? Are you with me? Now, what are the other components of salary? Annuity, pension, then gratuity, then fees, commission, perquisite or profits in lieu of or in addition to any salary or wages, then leave salary or leave encashment, then provident fund, then employer contribution to pension fund, etc. Don't worry, we are about to discuss each and every component in different permutation and combination. So we will be taking each and every component separately and we will be discussing its impact under the head salary. Are you with me? So let's start with the first component of salary. What is the first component? Allowances. Let's understand what exactly is allowances. So friends, listen. This is important, okay? This is actually important. First of all, Whenever we study Income Tax Act, you should know the definition of a particular word as well. Are you with me? Whenever you study a subject, you should know what is what. First of all, tell me, what do you mean by allowance? What do you mean by allowance? Payment given by the employer to the employee for what? It's a kind of cost meeting amount. Okay, say for example, an amount, fixed amount given by the employer to the employee to meet a certain expenditures of employee is said to be what? Allowance. For example, DNS allowance to meet the additional cost of living in a city. You tell me whether the cost of living in Madurai and cost of living in Chennai is the same, or the cost of living in Hyderabad or cost of living in Guntur is the same? No, it is not like that. So if the city, if it is a big city, comparatively more populated city, then the cost of living also will be comparatively high. Are you with me? So the DNS allowance is normally given by the employer to the employee to meet the additional cost of living. The next one, food allowance. What is that? Food allowance to meet the food expenses. Hostel allowance to meet the accommodation expenses. House rent allowance to meet the rental amount. Uniform allowance to meet the cost of uniform. Dress allowance to meet the cost of dress. Traveling allowance to meet the cost of travel. Are you with me? Transfer allowance to meet the cost of transfer. Conveyance allowance to meet the cost of travel between office and residence or meet the cost of official tour and all. So there are n number of allowances given by the company to the employee to meet expenses incurred by the employee. It can be a personal expense or it can be an official expense as well. Are you with me? The character of allowance that it will be always fixed. Normally the allowances are what? Fixed. What is fixed? Every month you will get a fixed amount as what? Allowance. House rent allowance, irrespective of your actual rent. Every month the company will give you what? A fixed amount as what, friends? Allowance. Are you with me? So a fixed amount given by the employer to the employee to meet the cost of employee is said to be what? Allowance. Are you all listening? Are you all listening? Now we are coming back to the Income Tax Act. That means allowances can be divided into three. From the perspective of Income Tax Act, you can divide the allowances into three. Which all are the three splits? Number one, fully exempted allowances. That means what? All the allowances that we are about to discuss under category 1 shall be fully exempted. That means employee is not supposed to pay any penny as taxes if it is under exempted category. Are you with me? Then what is the second category? Partly taxable allowance. Tell me, what is partly taxable allowance? Allowances not fully taxable, not fully exempted as well. Some part of the allowance will be taxable and the remaining part will be exempted. Are you with me? Partly taxable or partly exempted, we can say. That means out of the entire allowance, some part will be exempted and the remaining will be taxable. Are you with me? And what is the third category? Fully taxable allowances. Now we are about to discuss first two categories. I'm not planning to discuss the third category. Why? Very simple. If you study first two, then the third one will be others. And I cannot tell you which all are the fully taxable allowances because the employer can give any type of allowance to the employee. There are no fixed norms that you should give only these types of allowances. The employer can give any allowance to the employee by calling it whatever name he feels like. Are you with me? So only those allowances which are under category 1 and category 2, you have to focus for your exams. Whatever other allowances received by an employee from an employer shall be fully taxable. Are you all here? And this is actually very important as well. So let's start our discussion with fully exempted allowances. Item number 1, allowances which are fully exempted. And can you read the first one? Allowances to High Court judges. If you are giving allowances to High Court judges. Let's see what exactly is the impact. So can you read the first point? House allowance paid to judge for judges who does not avail himself an official house of High Court is not taxable. Have you seen this Judges Avenue? Normally, say if you go to Madras, you can see, or if you go to Chennai, you can see that near to the Madras High Court, there will be a Judges Avenue. What is the purpose of Judges Avenue? Say all those judges of High Court will give with a rent-free accommodation. They will be provided with an accommodation nearby. Are you with me? If you are a judge who are not accepting a rent-free accommodation and you are actually staying in a rented house separately and the legal system is paying you a house allowance to the judge who is not availing what? An official house, that the entire allowance shall be fully not taxable. That simply means, say I am a judge and I have not taken a house. I don't have a house, or we can say like this. Say I don't have an official house. Are you all with me? I don't have an official house because all the official houses were, say, occupied by other judges. I came late, so I don't have an official house. So the legal system is paying me what? Some allowance for taking a house outside on rent. That entire allowance given by me or received by me shall be fully exempted. Are you with me? So house allowance paid to a judge. To which judge? To a High Court judge who has not received an official house shall be fully exempted. Are you with me? Are you with me? So read that point. So pretty simple point. If you are a judge of a High Court and you are receiving what? A house allowance and you don't have an official residence as well, that entire allowance received by you shall be fully exempted. You don't need to pay any taxes for that. Moving on to the second one. What is item number 2? Can you read item number 2? Allowance paid by United Nations Organization, that is UN. So if you are an employee of United Nations and allowance paid by United Nations Organization to its employees are fully exempted, or we can say not taxable. Both are same. Exempted means not taxable. Not taxable means exempted. Both are same only. Are you with me? If you are an employee of United Nations Organization and you are receiving what? Allowances from UN, all the allowances received by you shall be fully exempted. Just like Red Cross workers or someone under United Nations, the peace workers and all. So you are working in India and you are receiving salary along with allowances. Then the entire allowance paid by United Nations shall be fully exempted. Are you all with me? Are you all with me? Moving on to the next one. Can you read the next one? Sumptuary allowance. What is that? Sumptuary allowance. That is allowance in connection with entertaining visitors given to the High Court judges and Supreme Court judges is not chargeable to tax. Sumptuary allowance, we can say it is just like a allowance given to a person who's in a honorary post. What is honorary post? Respectable post. The High Court and Supreme Court judges normally will get this allowance. It is called as what? Sumptuary allowance. If the High Court and Supreme Court judges are in receipt of any sumptuary allowances, that entire allowances shall be fully exempted. They need not pay any taxes to the sumptuary allowances. Are you all with me? So 3 types of allowances we have covered. And what is the 4th type that we have already studied? What is that? Allowances payable outside India under section 10 subsection 7. Do you remember? If government of India is paying salary to citizens of India who are providing services outside India, then that entire salary shall be deemed to be accrued or arised in India under section 9. But all the allowances and perquisites paid by government to those employees shall be fully exempted. We have discussed this under chapter 2, that is residential status and scope of total income. Do you remember that? Do you remember? So, can you read that point again? Allowances or perquisite paid or allowed outside India by government to a citizen of India for services rendered outside India are exempted from tax. So if you are an employee and you are given with a salary paid by the central government for providing services outside India, then that entire allowances shall be fully exempted under section 10 subsection 7 that we have already discussed under chapter 2. So these are the 4 types of allowances that you should know which are fully exempted, and let's revise that again. What is number 1? Received by High Court judges. What allowance? House allowance. One condition is there. What is that condition? That judge should not have an official residence. Number 2, second one. Allowances received by employees of United Nations organization shall be fully exempted. What is condition number 3? Sumptuary allowances received by High Court or Supreme Court judges fully exempted. Fourth one. Allowances or perquisites received by central government employees who are working outside India also shall be fully exempted. Are you with me? Is all the 4 points clear? Great. So what is the next one? Allowances which are partly taxable, or we can say fully not exempted, partly exempted. Are you with me? So second category onwards we have some numerical questions as well. From now onwards we have what? Numerical questions in relation to each and every adjustment. So let's understand what exactly is item number 2. So read the heading, allowances which are partly taxable. What is under that? Item number 1 is house rent allowance, and the exemption is under section 10(13)(a). Are you with me? What do you mean by house rent allowance? You tell me. What do you mean by house rent allowance? So let's understand. HRA simply means if an employee is staying on a rented premises, the company will what? Give a helping hand or show a helping hand by paying house rent allowance along with the salary. And will tell the employee that you stay in a rented house, don't worry, but we will pay you what? House rent allowance. So you tell me it's an income for the employee. It's a benefit for the employee. But department say that you can claim what? An exemption according to the conditions mentioned under section 10(13)(a). Are you with me? And what is first condition? House rent allowance granted to the employee is exempted to the extent of least of the following. What do you mean by least of the following? What do you mean by least of the following? Whichever is lower. So there are 3 limits. Whichever is lower will be exempted. That's what the department say. And this is actually very, very important. I think we can say most of the examination there will be an adjustment in relation to this HRA. In most of the examination there will be an adjustment in relation to HRA, and it is one of the most important topics under the chapter salary. So what is the first limit? What is limit number 1? Read. HRA actually received. What do you mean by that? You are in receipt of some house rent allowance. You can claim what? Exemption for the house rent allowance. And how much is the exemption? Least of the following 3. What is the first limit? The actual HRA received by you is limit number 1. And what is limit number 2? Rent paid minus 10% of the salary for relevant period. What does that mean? You take the entire rent paid by you because you are staying in a rented house. Yes or no? You take the entire rent paid by you minus 10% of your salary. You will get an amount. That amount is said to be exemption number 2. And what is exemption number 3 or limit number 3? 50% of the salary for the relevant period if the house is situated in metro city. What is metro city? What do you mean by metro city? A city which has metro? No. Metro city means depends upon the population. If the population is more than 40 lakhs, we can call a city as what? Metro city. And according to the 2001 census, we only have 4 metro cities. Delhi, Kolkata, Mumbai, Chennai. Maybe if a new census comes in, there can be more metro cities. So officially, we have only 4 metro cities, that is Delhi, Kolkata, Mumbai, Chennai. So what they are saying is, if you are staying in a metro city limit, then you take 50% of your salary as what? Third limit. Or if you are staying in a city which is not a metro, then 40% of the salary for the relevant period. So repeat friends, which all are the three limits? Actual HRA received. That is limit number 1. What is limit number 2? Rent paid minus 10% of salary. What is limit number 3? 50% of salary if you are staying in a metro city, or 40% of salary in the case of other cities. Are you with me? Now let me ask you one simple doubt. What do you mean by salary? Here department comes up with a definition for the word salary. For the purpose of computing exemption under 1013A, you require the salary because you have to take 10% of the salary, 50% of the salary, 40% of the salary, etc., etc. Yes or no? So the word salary is defined under 1013A. That means for the purpose of computing exemption under 1013A, salary means what? There is note number 2. Let's read that note number 2 together. What is the definition for salary? Salary for this purpose means basic salary plus DNS allowance if provided in the terms of employment. What do you mean by DNS allowance if provided in the terms of employment? First of all, what is the DNS allowance? There can be two types of DA. Okay, there can be what? Two types of DA. I'll tell you what is what. Say for example, you are my employee working in Hyderabad. You are my employee working in Hyderabad. I told you to go to Delhi. I told you to go to Delhi for 6 months. So you are working for me in Delhi for the upcoming 6 months. During your period of service in Delhi, I'll pay you a DA because cost of living in Delhi is comparatively very high. So I told you to go to Delhi and work for me for the upcoming 6 months. And you are going to Delhi and performing the work. When you are in Delhi, I'll pay you that extra DNS allowance. Are you with me? This is DA number 1. And there can be one more type of DA. What is the second type of DA? Very simple. Say friends, you are coming to my company. Say this is your first day or this is your interview time itself. I'm saying that whether you work in Chennai, Delhi, Mumbai, Calcutta, wherever you work, I'll give you DA. Wherever you work, I'll give you DNS allowance. It's a part of the official employment contract itself. And that we will make use to compute the retirement benefit as well. So those official DA, if it is there, then that DA is said to be what? DA if provided in the terms of employment. And this will be make use to compute your retirement benefits as well. Just like gratuity, provident fund, etc. This DA also they will make use of to compute your retirement benefit as well. So DF, if it is for a temporary period, don't consider it as a part of your salary definition. If it is an official DA, forms part of the retirement benefit. That means it is there clearly given in the employment contract only. You consider it as a part of salary for computing the exemption under 1013A. Are you with me? Are you with me? So in examination question, if they simply say DA, then what to do? If they simply say DA, then you have to write your assumption. Either you can assume that it is an official DA. It forms part of retirement benefit, or you can say it forms part of the employment contract, or you have to say it is just a temporary nature DA because the questionnaire is not mentioning that it forms part of retirement benefit or it forms part of employment contract. Hence we are ignoring it. Are you with me? If in the question itself they are clearly saying that it does not form part of the retirement benefit, then don't take it. Or if they are saying that it does not form part of the employment contract, then don't take it. Are you with me? Are you with me? And there is one more item under the head, under the definition salary. What is that? Commission. Only if it is expressed as the fixed percentage of turnover of the employer. Are you with me? So what is the definition for salary? Repeat that. Basic salary plus DNS allowance if provided in the terms of employment plus commission if it is expressed as the fixed percentage of turnover of the employer. So read that again. Basic salary plus DA forms part of employment contract plus commission if it is provided as a fixed percentage of turnover of employer. Now I am calling this as standard salary. I am simply putting a name. Okay, don't write this in exam, standard salary and all. because there is nothing called as a standard salary. This is a nickname because this definition is getting repeated under other sections as well. Are you with me? Are you all listening? This definition is getting repeated under other sections as well. So I am putting a name for this salary definition. It is called as what? Standard salary. So whenever I say standard salary, you should say basic salary plus DA forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your total turnover. Are you with me? Now repeat that again. Salary means basic salary plus DNS allowance if provided in the terms of employment plus commission if it is expressed as fixed percentage of turnover of employer. Now coming back to the point. So if you are in receipt of house rent allowance, this house rent allowance is one of the items under partly taxable category. Yes or no? And how do you claim exemption? Either actual HRA or rent paid minus 10% of the standard salary or 50% of standard salary if your house is in a metro city or 40% of the standard salary if your house is in some other city. Whichever is lower, the remaining HRA shall be fully taxable. Not exempted, taxable. Exemption is lower. So the remaining will be fully taxable. You with me? So the amount of exemption is the least of the following. So you compute these three limit, pick the lower, that lower will be exempted. If there is something more than that, that extra shall be taxable. Are you all here? Perfect. So let's go through note number 1. Can you read note number 1? Exemption is not available to an assessee who lives in his own house or in a house for which he has not incurred expenditure of rent. What does that mean? If you are receiving HRA and you are staying in your own house, no exemption for you. Whether you receive HRA or not depends upon your employer. That Income Tax Act cannot interfere. Are you with me? You are a person who is not paying any rent. You are staying in your own house or your relative's house. Then why the hell we should give you what exemption? If you are not suffering rent, we will not give you any exemption. Are you with me? Now, what is note number 3? Relevant period means the period during which the said accommodation was occupied by the assessee during the previous year. Say for example, you have received HRA only for 6 months. Then compute the exemption only for 6 months. That's it. So, relevant period means the period for which you have occupied the premises. Are you all with me? So friends, we were discussing about house rent allowance and which was under which category? Under which category? Allowances, partly taxable category or partly exempted category. Yes or no? Now let's complete the other things under this partly exempted category. So let's understand which all other things comes under partly exempted category. We will discuss each and every item one by one. So I want all of you to be very attentive right now. So what is the next item? Special allowances to meet expenses relating to duties or personal expenses is exempted up to the amount which is actually utilized for the purpose for which it was given to him. So I want all of you to read that box again. So can you read that box along with me? So let's read that together. So read that. Special allowances to meet expenses relating to duties or personal expenses is exempted up to which the amount which is actually utilized for the purpose for which it was given to him. And the exemption is under section 10, 14, clause number 1. We can say 10, subsection 14, clause number 1. What does that mean? So listen, the items which we are about to discuss right now is exempted if these allowances are utilized for the respective purposes. Are you with me? Are you with me? So the items which we are about to discuss right now, you will get what? Exemption, provided you have to actually utilize it for the respective purpose. Or rather we can say allowances where exemption depends on actual expenditure. Allowances where exemption depends on what? Actual expenditure. You tell me, what do you mean by allowances where exemption depends upon actual expenditure? The person who receives the allowance must actually expend it for the respective purpose. If you are expending it fully, nothing shall be taxable. If you are expending it partly, then the remaining shall be taxable. So where were we, friends? We were discussing about what? Allowances that are exempted. We were discussing about what? Allowances that are exempted depends upon actual expenditure. So friends, listen. This is under section 10, subsection 14, clause number 1. That means the following allowances are exempted based on a condition that, what is the condition? You have to actually expend that particular allowance for the respective purpose. Are you all with me? The following allowances are exempted subject to one condition. You have to actually expend it for the respective purpose. And let's understand each and every one in detailed manner. So imagine, say the first one, any allowance granted to meet the cost of travel on tour or traveling allowances. That means if you are getting what? Traveling allowance. Let's see what exactly is the exemption. So please listen, read along with me. Any allowance granted to meet the cost of travel on tour or transfer, that is called as traveling allowance. Allowance granted to meet the cost of travel on transfer includes any sum paid in connection with transfer, packing and transportation of personal effects on such transfer. Say for example, I am an employee working in Chennai. I got a transfer to Delhi. I got what? A transfer to Delhi. My employer has given me a transfer allowance or a traveling allowance. What is that transfer or traveling allowance? I need to pack everything from Chennai and I need to shift to Delhi. Are you with me? So packing cost, transportation cost, etc. will come. Traveling cost, etc. will come. So this, to bear up with this cost, my employer have given me a allowance. If I've expended that allowance fully for the respective purpose, nothing shall be taxable. If I haven't expended anything, fully taxable. I have expended something, then the balance taxable. Are you all with me? Say the total allowance that I got is say 10,000 rupees. I have expended up to 7,000. Then what will happen? If the total amount that I have received as allowance is 10,000 and I have expended 7,000, then what will happen? The remaining 3,000 shall be taxable. That is what it is called as allowances where exemption depends upon your actual expenditure. Are you all with me? So item number 1 is said to be what? Repeat that item number 1. Any allowance granted to meet the cost of travel on tour or on transfer. It is called as traveling allowance. If you are getting an allowance for the cost of travel on tour on transfer, that allowance is called as either transfer allowance or traveling allowance. If that entire amount you have expended for the respective purpose, then that entire amount you can claim as an exemption. Are you with me? Are you with me? Now, what is item number 2? Can you read item number 2? Any allowance, whether granted on tour or for the period of journey in connection with transfer to meet the ordinary daily charges incurred by an employee of absence from his normal place of duty. It is normally called as daily allowance or per diem allowance. Normally, it is given to those employees who are in transportation sector. Say for example, I am a bus driver. Okay, I am driving a bus from Chennai to say Hyderabad. Are you with me? So on my journey, I have to start from Chennai and have to reach to Hyderabad. Are you all with me? So on my journey, I have to come up with different types of cost. Are you all here? I have to meet and come up with different type of cost. Say for example, I require food. So I have to meet some food expenditure. For all those expenditure, my employer has given me what? Daily bata. My employer have given me what, friends? Daily bata. Are you with me? In such a case, what will happen is the daily allowance that I get is fully exempted if I have expended that particular allowance for the respective purpose. Are you all with me? If I am getting any daily allowance for meeting my daily expenditure, it may be in relation to transport or it is in relation to some other purpose. If I am expending it for the respective purpose, I can claim an exemption for that as well. Are you all with me? So can you read the second item again? So what is daily allowance? If your employer gives you an allowance for what? For your daily needs. Maybe in relation to your transportation or maybe in relation to your food or something. So it is normally called as daily allowance or per diem allowance. If you are receiving daily allowance or per diem allowance, then you have expended that particular allowance for the respective purpose, then that allowance shall be fully exempted. Nothing shall be taxable. You are receiving 10,000 and you are spending 8,000. Then what will happen? 8,000 exempted, 2,000 taxable. It is as simple as that. Are you with me? Moving on to the third item. What is the third item? Any allowance granted to meet the expenditure incurred on conveyance in performance of duties of an office or employment of profit. What does that mean? Say for example, you are a supervisor. You are a supervisor of a construction company. Your main job is to travel from one site to another site and verify the progress of each work. Are you all with me? Are you all listening? Say you are a supervisor of a construction company and your main job is to transfer or your main job is to transport or to travel from one site to another site for checking the progress of each work. For that transportation, you require some money. Yes or no? For that, your employer is paying you what? A conveyance allowance to perform your official duties. If you are in receipt of a conveyance allowance to perform your official duties and you have expended it for that respective purpose, then nothing shall be taxable. And what if you are saving it? Fully taxable. What if you are expending something and if there is some balance, then balance shall be taxable. Are you with me? Moving on to the fourth one. Can you read the fourth one? What is that? Any allowance granted to me expenditure incurred on helper where such helper is engaged in performance of duties of an office or employment of profit. It simply means you have appointed an official helper. What is official helper? Say you are heading a particular project and you need a assistant for helping you and you have appointed an official helper and your company is giving you an allowance to meet the salary of that official helper. Helper here doesn't mean your domestic servant. Are you with me? It is not your housemaid and domestic servant. It is an official personal assistant or official helper or someone to assist you in your official duty. You have appointed yourself and your company is giving you an allowance for that and you have expended that amount, then nothing shall be taxable. And if there is something balance, then that balance amount only shall be taxable. Are you with me? And it is called as what? Helper allowance. What is the fifth one? Any allowance granted for encouraging academic research and training pursuits in educational and research institution. We call it as research allowance. Listen, say for example, you are doing some, say you are working in a company and you are continuing your PhD. You are continuing your PhD. Your employer is motivating you by giving you an allowance. They are saying that make use of that money for your educational expenditure. Are you with me? So it is considered as a research allowance. That means allowance that you got from the employer for your academic improvement or academic betterment. If you are receiving that allowance and you are expending it for the respective purpose, nothing shall be taxable. If you are saving something, then the amount saved only shall be taxable. Are you all with me? It is called as what, friends? Research allowance. And what is the last item out of this? Any allowance granted to meet the expenditure on purchase or maintenance of uniform for wear during the performance of duties of an office or employment of profit. It is called as what? Uniform allowance. That means in your company you have to buy a uniform. You have to wear a uniform. For that your employer is giving you a allowance and you are spending it for the respective purpose, then nothing shall be taxable. If you save something, only the amount saved shall be taxable. Are you with me? So how many items we have discussed? Let's summarize all the 6 items. What is item number 1? Transfer or traveling allowance. What is the main purpose of that allowance? It is to meet the expenditure in relation to transfer. That means all the traveling expenditure that you incur in relation to your transfer. If you are getting an allowance, expending it, don't worry. Are you with me? Second one. What is the second one? Daily allowance. That is per diem allowance. Daily or per diem allowance. That means daily needs if your employer is giving you an allowance. Daily needs means you are not working in the normal place of duty. You are a bus driver or something. For your daily needs, if your employer is giving you a allowance, then that allowance you have expended it, then nothing shall be taxable. What's the third one? Conveyance allowance. That is for the travel of official purposes. If you are getting a conveyance allowance and expending it, nothing shall be taxable. Fourth one, helper allowance. Official helper. The company is giving you an allowance, you are expending it, nothing shall be taxable. The next one, research allowance. For your academic research, the company is giving you an allowance, you are expending it, nothing shall be taxable. And what is the last one? What is the last one? Uniform allowance. For your uniform, your company is giving you an allowance and you are expending it, then nothing shall be taxable. Are you okay? Are you all able to follow all those 6 items? So let's repeat all the 6 items again for a better understanding. So friends, let me ask you one doubt. Say for example, I received some dress allowance. I received some what? Dress allowance. And I bought some dress. Can I claim exemption? No. If it is uniform allowance and I bought some uniform, then I can claim what? Exemption. Otherwise, I'm not supposed to claim any exemption. Are you with me? Another example, I've received some research allowance. I haven't expended it. I've saved that entire amount. Then what will happen? Entire amount shall be fully taxable. So this category is totally depends upon how much you have expended. That's why initially I've written exemption allowances which where exemption depends upon actual expenditure. If you actually expend it for the respective purpose, you can claim exemption, otherwise not. Moving on. Not yet over. Under this category, one more item is there. This item is not that important for your exam, but we will cover all the items. Okay, we will discuss all the items, but it is not that important for the exam. Out of this, only 4 items are important for exam. Apart from that, you just simply read that. That is more than enough. So let's understand which is the second category under this. So can you read the side heading? Special allowances granted to the assessee either to meet his personal expenses at a place where duties of his office or employment of profit are ordinarily performed by him, or at a place where the ordinarily resides, or to compensate him for increased cost of living subject to certain ceiling limits under section 10 subsection 14 clause number 2. So it is also called as fixed exemption allowances. Are you all with me? So friends, listen. Under partly exempted category, the first one that we have discussed is what? Under partly exempted category, what was the first one that we have discussed? That is exemption for HRA, which was under section 10, 13A. The second one we have discussed is what? Exemption where or allowances where exemption is subjected to actual expenditure. Yes or no? Which was under section 10, 14, clause number 1. Now we are about to discuss exemptions which are fixed, which is under section 10, 14, clause number 2. So third one under partly exempted category, or we can say partly taxable category as well. What was item number 1? House rent allowance. And which was the exemption section? 10, 13A. Second item, allowances where your exemption depends upon actual expenditure. That's what we have discussed just now. Are you with me? And it was under which section? 10, 14, clause number 1. 10 subsection 14, clause number 1. And which was the third one, which we are about to discuss? Fixed exemption allowances, which is under section 10, 14, clause number 2. What is fixed exemption? Whether you actually expend it or not, your exemption will be fixed. The following allowances which we are about to discuss, whether you actually expend it or not, your exemption will be always what, friends? Fixed. So let's understand which all are the fixed exemption category items. So I want all of you to read these items along with me, which is item number 1. Can you read item number 1? Special compensatory, that is hilly area allowances. You tell me, what is this hilly area allowance? You are actually working in a hilly area. Okay, in a hilly area which is way above the sea level. Then it is very difficult for a person to cope up with that particular climate. Are you with me? If you are working in those kinds of areas, your employer will give you certain allowances. If you are getting that allowance, income tax department also will give you certain exemptions. So first one is special compensatory, that is hilly area allowance or high altitude allowance or uncognitable climate allowance or snowbound allowance or avalanche allowance. Just like you are in Himalayas or you are in where say for example a place where like Kodaikanal or something, you are in a place where which is way high above the sea level, or it is full of snow, Jammu and Kashmir, something like that. So to cope up with that climate, your employer will give you what? Some extra allowance like Shimla or something. Are you all with me? It is okay. Then you will don't think like Shimla is a beautiful place. Okay, I will be more than happy to go over there. When you stay over there for a longer period, you will understand the difficulty of that respective place. Are you with me? Say for example, I am an employer. I am appointing you in Chennai and I am giving you 10,000 per month. And I'm appointing someone else in Shimla for 10,000 per month. The other person will say, sir, you were giving same salary to the person in Chennai. I also want to work in Chennai. That I have to expect. So that I will say that you work in Shimla, I will pay you 10,000 as basic and 2,000 as what? Allowance, hilly area allowance. Are you with me? Are you with me? So that is the purpose of giving this hilly area allowances or snowbound allowances or high altitude allowances. Now, how much is the exemption? Read, rupees 800 or 300 per month depending upon the specified location. In the income tax schedule, they are mentioning certain locations. Depends upon the location, the exemption can be either 800 or 300. Which all are the areas where you will get rupees 800 as exemption? You don't need to study. Which all are the area where you will get 300 as exemption? You don't need to study. That's what I said. These are not important for your exams. Are you with me? It is not there in your syllabus as well. It is not specifically mentioned in your syllabus as well. Just go through this and understand there is an allowance like this. That is more than enough. And one more is there. Rupees 7,000 per month in Siachen area of Jammu and Kashmir. If you are working in Siachen area, then your allowance is how much? Not allowance. Exemption is 7,000 per month. Allowance may be 10,000. You will get exemption up to 7,000. Are you with me? Are you with me? Why Siachen area more exemption? It's a dangerous area. It is actually a dangerous area. This kinds of glaciers, snowfalls is comparatively very high over there. Are you with me? And so the point what they are saying is, if you are working in hilly area and your employer is giving you allowance, then how much is the exemption? Depends upon the place. It can be either 800 rupees per month or 300 rupees per month. Is the exemption I'm talking about. And if you are working in Siachen of Jammu and Kashmir, your exemption shall be fixed up to 7,000 per month. If you are receiving more than this, the excess shall be taxable. If you are receiving less than this, the entire amount received shall be exempted. If you are receiving exactly this, fully exempted again. Are you with me? Imagine a case where I'm working in Siachen of Jammu and Kashmir and I'm receiving 5,000 rupees as allowance. Can I claim 7,000 as exemption and claim 2,000 as loss? No, it's not possible. Exemption means if your amount, actual amount is less than 7,000, then you can claim only that 5,000 as exemption. Are you with me? These all are basically common sense. That is why it is called as exemption. Otherwise, they will claim it as deduction. Deduction means you can claim that entire amount. They're only saying exemption. What is exemption? Up to 7, we shall not tax. If your actual amount is less than that, then we will tax nothing. If it is more than that, we will tax only that excess. Are you all here? Perfect. So, moving on to the next one under this category. What is the next one under this category? Border area allowance or remote locality allowance or difficult area allowance or disturbed area allowance. What does that mean? You are working in a border area. Say like Taiwan. Taiwan. It is Arunachal Pradesh. Tawang. You are working somewhere near to Tawang, where we share the border between China. Or you are working in somewhere in Punjab, where we are sharing border with Pakistan. Are you with me? So, if you are working in that area, then it is a kind of a disturbed area or a border area. Are you with me? Comparatively, the risk is also high. Are you all here? So, if you are working in that area, your employer might give you an allowance. For that allowance, can you claim exemption? Yes. And how much is the exemption? Either rupees 1,300 or rupees 1,100 or rupees 1,050 or rupees 750 or rupees 300 or rupees 200. These are all monthly exemption depending upon the specified location. Depends upon where you work. This exemption also varies. You don't have to study the place wise exemption and all. It is actually not required. If you want to study, you can go check the income tax schedule, download the Indian map and understand the place and exemption. All these are actually not required for your exams. Are you with me? So what is the second one, friends? Border area allowance or remote locality allowance or difficult area allowance or disturbed area allowance. Your exemption is 1,300 or 1,100 or 1,050 or 750 or 300 or 200. These exemptions are per month basis. Depends upon how much you are getting in a month. Depends upon where exactly you are working. Are you all with me? Moving on to the third one. What is the third one? Special compensatory allowance. That is tribal area, scheduled area, agency areas, etc. What do you mean by tribal area? What do you mean by tribal area allowance? You are working in a near to forest, a very remote area where you are facing some difficulties, especially in transportation, in food, buying goods, etc. There can be difficulties. Are you with me? Say you are working near to Satyamangalam forest. I hope it is a dense forest. Yes or no? So, say I am working in a Satyamangalam forest, as I have told you. It's a kind of a tribal area. And my employer is giving me an allowance. Okay, that allowance I can claim an exemption. And how much is the exemption? It is 200 rupees per month. Are you with me? If I am getting any tribal area or a scheduled area or agency area allowances, then I can claim an exemption up to 200 rupees per month. Depends upon how much I am receiving. Whether I have expended it or not, I can claim this exemption because this category is fixed exemption category. Are you with me? Are you with me? These are just like standard deductions. Whether I've applied it for the respective purpose or not, every month I can claim up to this amount. Are you all with me? Perfect. Moving on to the next one. Next one is actually important for your exam. So I am marking it as important. Next one you must study. What is the next one? Can you read it? Any allowance granted to the employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided that such employee is not in receipt of daily allowance. And how much is the exemption? 70% of such allowance up to maximum of 10,000 per month. So listen. Say there are two employees. Okay, there are two employees. Say there is a traveling company. Traveling and touring company, and there are two employees in that company. There are two employees, employee A and employee B. Employee A have daily transport. He have to pick clients from one place to another place. He's a taxi driver. Imagine employee A is a taxi driver. The taxi is owned by the traveling and touring company and he is one of the driver. Are you with me? Are you with me? And the company gives him daily allowance. Daily allowance. Then you tell me, he is expending that daily allowance for that respective purpose. Because daily he have what? He have duty. Daily he have to come, pick up the clients, drop it somewhere, come back. So daily allowance the company is giving and he is expending the daily allowance fully for the respective purpose. My question is, can he claim any exemption? Can he claim any exemption? The answer is yes. Under which category? Under section 10, subsection 14, clause number 1, daily allowance. If you have expended that particular allowance for the respective purpose, you can claim exemption in full. Are you with me? That we have already studied. Yes or no? Now for employee B, say for employee B, he is the driver of a tourist bus. We have a tourist bus also. He is a driver of that particular tourist bus. This tourist bus does not have daily journey. You don't have to go daily. Are you with me? Maybe once in a week there can be a journey. Depends upon how the customers are booking that particular vehicle. Maybe once in a month or once in a week or twice in a month, something like that. Whenever he performs a journey, the company pays him an allowance. Whenever he performs the journey, the company pays him what? Allowance. It is called as what? Transport allowance under here. It is called as what, friends? Transport allowance. Or we can say any allowances granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided such employee is not in receipt of daily allowance. If you are not receiving daily allowance, but you are receiving allowance whenever you perform a journey, then it will be covered under category 3, under section 10, subsection 14, clause number 2. And you can claim what? Fixed exemption. And how much is the exemption? Either 70% of such allowance up to maximum of 10,000 per month. Are you with me? Say for example, employee B is getting a monthly allowance of say 12,000 rupees. Every month he is getting an allowance of how much? 12,000 rupees. Can you tell me how much is the exemption? If he is receiving 12,000 rupees per month, every month he is getting 12,000 rupees as transport allowance, how much will be his exemption? Either 70% of 12. How much is 70% of 12,000? 8,400. He can claim as exemption. And how much is the remaining amount? 3,600 is the remaining amount. That shall be fully taxable. This is per month. Are you with me? Are you with me? Imagine he is getting a monthly allowance of 20,000. What if he is getting a monthly allowance of 20,000? How much is 70% of 20,000? How much is 70% of 20,000? 14,000. But you will get a maximum exemption only up to 10,000 per month. So your exemption will be how much? Only up to 10,000 per month. And the remaining 10,000 shall be fully taxable. Are you with me? So if you are in receipt of transport allowance, then how do you claim the exemption? It is fixed exemption. Either 70% of the monthly allowance or 10,000 per month, whichever is lower. That is what it is called. Whichever is lower. Are you with me? So we will read that again. Can you read this paragraph again? I want all of you to read this paragraph along with me. Can you read this again? Any allowance granted to the employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided such employee is not in receipt of daily allowance. You are not receiving any daily allowance and you are receiving this transport allowance. Then your exemption will be under 10, 14, clause number 3. If you are receiving daily allowance, then exemption will be under 10, 14, clause number 2. If you are receiving daily allowance, your exemption will be under 10, 14, clause number 2. If you are not receiving daily allowance and, clause number 1. I said 3, right? 3 and 2. Okay. That is category 3. That's what I meant, but unintentionally I said clause number 2 and 3. Okay. I meant 1, 2 and 3. Clause 1 and clause 2. If you are receiving daily allowance under clause 1 and if you are receiving transport allowance under clause 2, it is like that. Are you all with me? Have you understood what I said? So in examination, this can be very sensitive. The purpose of the exemption is almost the same, but the way they are providing the allowance is different. If they are saying daily allowance, 1014 clause 1. They are saying transport allowance, 1014 clause number 2. They will mix it up. Are you all here? Perfect. Moving on. So how much is the exemption? We haven't read that part. How much is the exemption? 70% of such allowance up to maximum 10,000 per month. This is the exemption and this is a fixed exemption. What is fixed exemption? Whether you have actually expended that amount for the respective purpose or not, you will get the exemption, irrespective of the fact that whether you have expended it or not. Is that point clear for everyone? Great. Next one is also important. That is said to be what? Children education allowance. What do you mean by children education allowance? Make a guess. What will be children education allowance? So, what is children education allowance? That simply means the employer is giving an allowance to the employee for the education of employees' children. Say the allowance given by the employer to the employee is 2,000 per month. The allowance given by the employer to the employee is how much? 2,000 per month. That 2,000 is an extra amount received by the employee from the employer on account of employer-employee relationship. Yes or no? Yes or no? Hence you have to pay taxes for that 2,000, but you can claim an exemption. And how much is the exemption? It's a huge amount. How much is the exemption? Rupees 100 per month per child up to maximum 2 children. That means in a month, if you have one child, how much is the maximum exemption? 100 rupees. For one child, 100. If you have 2 children, up to 200. If you have 3 children, 200. Are you with me? That too per month. That means in a year, 100 into 12. 1,200 rupees in a year. Even you cannot buy notebooks also with that amount. It is that big. Okay, va? So that's what they are saying. So it is actually 1961's limit it is. They haven't amended it yet. So we have to study this limit only. Are you with me? This limit is there from the beginning of Income Tax Act itself. They are not bothered about amending this limit, and hence that's why the exemption is 100 rupees per month per child up to maximum 2 children. This is what the department says. And you will get this exemption even if your children are not studying. Your children is simply sitting at home. You are receiving the allowance. No problem. You can claim exemption up to 100 rupees per month per child up to 2 children. Are you with me? But there is a problem. What is the problem? What department say? If your children is studying abroad, if your children is actually studying abroad, then we will not give you any exemption. If your children is not studying, no problem. You take exemption. But if they are studying abroad, we have no plans to give you this exemption. Are you with me? Are you with me? So, listen. So, coming back to the point, friends, where were we? Children education allowance. How much is the exemption? 100 rupees per month per child up to maximum 2 children. Okay, not yet over. There is one more thing. What is the next one? Next item. Any allowance granted to an employee to meet the hostel expenditure on his child. That means employee's children is actually in a hostel. Employer is giving an allowance to meet the hostel expenditure. Can the employee claim an exemption for that allowance? The answer is yes. But how much is the exemption? Again, huge figure. How much is that? 300 rupees per month per child up to maximum 2 children. That is the maximum exemption that the employee can claim. Whether or not their children is in hostel. Even if they are day scholars, they can claim this exemption up to 300 rupees per month per child up to maximum 2 children. But the problem is this note. Can you read the note? No exemption is available in respect of education and hostel allowance received for any education of children outside India. If your children is actually studying outside India and you're receiving an education allowance or hostel allowance, then nothing shall be exempted. It shall be fully taxable. But the interesting fact is, even if your children are not studying, you can claim this exemption. But you cannot claim if they are studying abroad. That simply means you can claim the exemption if they are studying in India or if they are not studying at all. But you are not supposed to claim exemption if they are studying outside India. That's what the department says. We don't entertain people studying outside India. So we have no plans to give you what? Exemptions. Are you with me? This is actually important. All these 3 items will come under important criteria or important category. Number 1, that transport allowance. How much was the maximum exemption? 70% of the per month allowance or rupees 10,000, whichever is lower. That's what is called maximum up to 10. What was the second one? Children education allowance. How much was the exemption? 100 rupees per child per month, that to only up to maximum 2 children. Third one, hostel education expenditure. Hostel education allowance. Maximum exemption 300 rupees per child per month, that to for maximum 2 children. That too, one note is there. If your children are actually studying abroad, no exemption for the education as well as hostel allowances. Are you with me? What is the next fun item, friends? That is compensatory field area allowance, that is specified area. So if you are working in certain specified area, then you will get a special allowance. For that, you can claim an exemption. And how much is the exemption? 2,600 per month. Which all are the areas that you don't need to study? That's why it is not important for your exam. So compensatory field area allowance means in certain specified area, if your employer is giving you a special allowance, that allowance is fully taxable subject to exemption. And how much is the exemption? 2,600 per month, fixed exemption. What is the next one? Compensatory modified field area allowance. Again, in certain specified state, you will get modified field area allowance. For that, how much is the exemption? Read. How much is the exemption? 1,000 rupees per month. Then what is the next one? Any special allowance in the nature of counter-insurgency allowance granted to the members of armed forces operating in areas away from their permanent locations. These army people, normally they work in the border, all those pickets and all, or they will work in certain camps and all. It is called as what? Counter-insurgency allowance, normally given to the army people. If they are getting this allowance, how much is the exemption that they can claim? 3,900 per month. Then next one also you have to study. This is important. This is important. You have to study. What is the next one? Can you read it together? Any transport allowance granted to an employee who is blind or deaf and dumb or orthopedically handicapped with disability of lower extremities of body to meet his expenditure for commuting between his residence and place of duty. What do you mean by this? What do you mean by blind? Is not able to see. What is deaf and dumb? Not able to hear and speak. What is this orthopedically handicapped with the disability of lower extremities of the body? Either he don't have a leg or his leg is paralyzed or something like this. He's in wheelchair or something. Are you with me? If your company have that kind of an employee, either blind or deaf and dumb or have some disabilities with legs, then what to do? and you're giving some special allowances for that person for his travel between home and office, then that person can claim an exemption. And how much is the maximum exemption that he can claim? How much is the maximum exemption? 3,200 rupees per month. It's a fixed exemption. Whether he have claimed, whether he have expended that amount for the respective purpose or not, every month up to 3,200 rupees he can claim an exemption. Are you with me? This is actually important as well. So you tell me, for what is the nature of that particular exemption? Any transport allowance which is granted to an employee who is blind, deaf and dumb, or orthopedically handicapped with a disability of lower extremities of the body, to meet his expenditure for commuting between residence and his office. Place of duty means office. Then that particular allowance, you can claim an exemption, and you tell me how much is the exemption? How much is the exemption? 3,200 per month. That's it. Moving on to the next one. Underground allowance granted to an employee who's working in uncontinental or unnatural climate in underground mines and all. Just like our Rocky Bai. You know KGF. They are working in gold mines. Yes or no? So to that people, if the employer is giving what? Any allowance, then they can claim what? An exemption up to how much? 800 rupees per month. If you are working in some mine or some underground area or something, then you can claim an exemption for the allowance that you got. And how much is the exemption? 800 rupees per month. Moving on to the next one. What is the next one? Any special allowance in the nature of high altitude allowance granted to the member of armed forces operating in high altitude areas. If you are an army person working in high altitude areas, then you are working in a place where the altitude is between 9,000 to 15,000 feet. How much is the exemption? 1,060 per month. You are working in a place which is above 15,000 feet, then 1,600 per month. Are you with me? And this allowance is, this exemption can be claimed only for whom? Armed forces. If you are a member of armed forces, that means our army people who are working in a place where the height is up to 15,000. That means above 9,000 feet and up to 15,000 feet. A maximum exemption is 1,060 per month. And if it is above 15,000 feet, how much is the exemption? 1,600 per month. These are not very important. Okay, that's why I'm simply going and jumping to the next item. Are you with me? Then what is the next item? Any special allowance in the nature of special compensatory highly active field area allowances granted to the member of armed forces. What do you mean by highly active field area? Border areas normally, where there are some counter attacks or some terrorist activity, etc. Highly active field areas. Are you with me? For those armed forces who are working in highly active field area, they will be normally given with an allowance. And how much is the exemption? 4,200 per month. If you are a person working with the army and you are working in a place which is very active or high risk area, then your employer will give you a special allowance. For that allowance, how much is your exemption? 4,200 rupees per month is your exemption. Are you with me? And what is the last item? Any special allowance in the nature of island duty allowance granted to the member of armed forces in Andaman and Nicobar and Lakshadweep group of islands. If you are a person working with the army, that to win either Andaman and Nicobar or with the Lakshadweep island, you will normally get a special allowance from the government. For that, you can claim an exemption up to how much? 3,250 per month. Are you all here? Out of these, which all are the important ones? That means items that you must study. I'll tell you. Okay. Out of this third category, that is fixed exemption category, I'll tell you which all are the important ones. So please listen. Number one, this transport allowance, where exemption up to 70% of the monthly allowance or maximum up to 10,000 per month. That is important. Children education allowance, important. Hostel allowance, important. Then this blind, deaf or dumb, for that commutation between house and office, that is very important. These are the 4 important items that you have to study under this category, that is fixed, exemption, allowance category. Are you with me? Are you with me? This you must study, otherwise that's a problem. Okay, normally they used to ask all these 4 from this category, and category 1, all of the items you have to study. All other items that I am discussing you have to mandatorily study. This category 2 is not that important. You normally don't test this area, but these 4 under this category you have to mandatorily study. Are you with me? Yes, are you all with me? So we were discussing about what, friends? Allowances. And what was the first allowance that we have discussed? That is fully exempted allowances. Second one, partly taxable or partly exempted allowance. Now there is one more category. You tell me, what is that category? Fully taxable allowance. Can you tell me an example for a fully taxable allowance? Food allowance, dress allowance, and all other allowances, by whatever name it is called. Are you with me? If an employee is in receipt of any other allowance which we haven't discussed under fully exempted category or partly exempted category, then the other allowance shall be fully taxable as a component of salary. Is that point clear for everyone? Great. Moving on to the next component under the chapter, salary. Let's understand what exactly is the next component under the chapter, salary. It is called as pension. So, pension. You tell me, what do you mean by pension? What do you mean by the word pension? See, after retirement, since we have done a lot of past services for our employer, after retirement, there won't be any monthly salary. Yes or no? Because we have already retired. But we require some money for our daily needs after retirement. The employer will give us this small amount of sum for the benefit of our afterlife. Afterlife means it is not the other afterlife, okay? I mean after retirement life, that's what I meant. Are you with me? Afterlife don't mean that the other afterlife, okay? Adukku money not required. Afterlife enna required? First of all, there is afterlife or not, we don't know. We are believing, or you may not be believing that. Okay, so that is a totally debatable subject. So we are not debating on that. We are coming back to pension. After retirement life, okay, there you need some amount of money for your daily living. Your employer will give you this small amount as what? Pension. Are you with me? Yes. Pension is also a taxable component under the head salary. Why? Because there is a past employment-employee relationship involved with pension. Are you all here? The past employer-employee relationship involved in relation to pension. Now friends, listen. According to the income tax law, we can divide pensions into 2 categories. We can divide what? Pensions into 2 categories. Number 1, uncommuted pension. You tell me, what do you mean by uncommuted pension? The monthly pension that every person receives is said to be what? Uncommuted pension. If you are receiving pension monthly, that amount is said to be what, friends? Uncommuted pension. Are you with me? Uncommuted pensions are fully taxable under the head salary. You are not eligible to claim any type of exemption if you are in receipt of what? Uncommuted monthly pension. That entire monthly pension that you receive for a year shall be fully taxable. Every month you will get it. Into 12 months for the previous year, the total amount that you receive will be fully taxable under the head salaries. Are you with me? Are you with me? Yes. Entire uncommuted pension that you receive is fully taxable. Now there is one question. There is the second type of pension, and what it is called as commuted pension. You tell me, what is commuted pension? Listen, have you heard about this word commuted pension? Have you heard about this word commuted pension? The point is, commuted pension simply means, say, imagine a case where, say, you got retired today. You got retired today and you require some lump sum amount. You require what? Some lump sum amount. what will you do? Pension is only a monthly sum, that to a very small sum. You can discount your pension. It's just like discounting. It is not exactly discounting. Have you heard about discounting? As it is something related to that. You can go to your employer and say that I don't want my monthly pension. I'm planning to what? Commute my pension. Give me one single lump sum payment rather than giving me monthly pension. This is said to be what? Commutation of pension. Are you with me? Yes, rather than taking monthly amount, the employee is saying to the employer that I don't want your monthly amount. You should say it in a polite manner. Okay, sir, I don't want your monthly amount. Please give me a lump sum amount. It is not a punch dialogue. Okay, it's not an action hero movie. Okay, so you have to go to your employer and you have to say that, sir, I'm not interested in what? Monthly pension. I'm planning to commute my pension. So the employer will have a workings. The employer, there is a person called actuary. Actuary is an expert who does these kinds of valuation. The actuary will calculate the amount of commutation of pension and he will give you a lump sum amount. Are you with me? So if you are commuting your monthly pension for a lump sum amount, that process is said to be what, friends? Uncommuted pension. So let's see, means converting their future right to receive pension into a lump sum amount receivable immediately. That means pension normally is a monthly future payment. Commutation means I don't want that future monthly small payment. Give me a one single settlement, a lump sum amount. That process is said to be what? Commutation. Now there is one thing. It is not necessary that you have to commute your pension in full. You can commute 50% of your pension. Say for example, say your monthly pension is 10,000. Say your monthly pension is how much? 10,000. You are saying to your employer that, sir, I am planning to commute my 50% of the pension. Then what will happen? After commutation, you will receive 5,000 rupees as monthly pension. And you will get a lump sum amount. Depends upon how the actuary calculates. Are you with me? So the point is, it is not necessary that you have to commute your pension in full. You can have a partial commutation also. Say 40% of your monthly pension or 50% of the monthly pension, 70% of the monthly pension you can commute. In that way, you will get monthly pension for the remaining percentage, plus you will get a lump sum amount. How much you will get the lump sum amount, that I cannot say. That depends upon the actuary's valuation. Are you all here? Are you getting what I'm saying? Moving on to the point is, if you are getting a lump sum amount under a pension commutation scheme, then the department will give you an exemption under section 10(10)(a). So the point is very simple. Whatever pension that you've received, if it is a commuted pension, you can claim an exemption in accordance with section 10 subsection 10(a). If it is an uncommuted pension, you are not eligible for any exemption and that entire uncommuted pension shall be fully taxable. Are you with me? This is actually important, okay? This is actually important. So pension, you have to divide it into two. Pension, you have to divide it into two. Number one, commuted, and number two, uncommuted. Uncommuted, no exemption. Commuted, you will get an exemption subjected to the conditions mentioned under section 10 subsection 10(a). Let's see. So let's read it one by one. So can you read the first box? Employees of central government, local authority, statutory corporation, member of defense services. Full pension that is computed shall be exempted. If you are a CG employee or a local authority employee or a member of statutory corporation or a member of defense services, be happy. The entire commuted pension shall be fully exempted. You are not supposed to pay any taxes for the entire commuted pension. But for the uncommuted portion, it is fully taxable, even if you are a government employee. Are you all listening? We are talking about exemption if it is a commuted pension. If you are a government employee, that means a CG employee or a local authority or a statutory corporation or a member of defense services, the entire commuted pension shall be fully exempted. Are you all here? Have you understood what I said? Now, what if you are other employees? What do you mean by other employee? What do you mean by other employee? Not government, not local authority, not statutory corporation, not defense service. You are some other company employee. Say you are a normal private company employee and you are commuting your pension. Then how do you claim exemption? For other employees, the first thing that you have to check is whether the employee is in receipt of gratuity. You have to check what? Whether the employee is in receipt of what, friends? Gratuity. Now you tell me, what is gratuity? What do you mean by gratuity? Alright, so listen, it is again another retirement benefit. So there are 3-4 types of retirement benefits. So please listen. There are 3-4 types of retirement benefits. We'll start with the pension. What is the purpose of pension? What is the purpose of pension? After retirement, you need money for your daily needs. Yes or no? For that, the employer will give you a small sum. Are you with me? Normally, they will create a pension fund. To that pension fund, both the employer and employee will contribute. That pension fund at the time of retirement, from that fund only you will get what? Pension. Are you with me? Pension is not a complete out-of-pocket expenditure for the employer alone. You and your employer both will contribute to the pension account. During your period of service, when you have salary, from that amount of salary, they will cut something to the pension account and they will put it under pension account. And the employer also will take some amount and put it under pension account. Once you retire, you will get amount from that respective pension account only. Are you all able to follow what I am saying? That is for pension. Now, second one is said to be gratuity. What is gratuity? Gratuity simply means, say you are an employee, work for 20-30 years in a company. You work for how many years? 20 or 30 years. Thereafter, you are retiring. So, you work for a very longer period with one employer. So, the employer now have to show some gratitude because you have worked all your good lifetime is with me. Okay, you have done a very good job with me. So, now I have to show some gratitude by giving money, not by saying thank you so much. Okay, take care. God will bless you. Not that gratitude. We should give some gratitude in terms of money. So, that amount of money given by the employer from his pocket to the employee at the time of retirement of employee is said to be what? Gratuity. It will be fully gratuitous for the employee. The employee need not invest anything for the gratuity. It will be completely taken from the pocket of employer. Are you with me? It is a gratuitous payment given by the employer to the employee at the time of retirement of employee. Are you all giving are you all listening? Just like a Thanksgiving, the employer is giving a lump sum amount to the employee. Are you all here? Perfect. And one more thing is there. It is called as what? Provident fund. Okay, let's understand what is the provident fund. Third retirement benefit. Are you all with me? Provident fund simply means, say, imagine a case where you were working with a particular company, now you got retired. You don't have enough money with you. You don't have enough money with you. So if you don't have enough money, then what will happen? You will take the help of government for your medical facility, and for the other facility, you will go after the government. Are you with me? Every people in India, if they go after government, what will happen? Government will not be able to manage everyone. The government hospitals and all is already it is fully crowded. Right now, all the other people they are coming after government, then the government will be in trouble. So what government says is, during your period of service itself, we want you to save your money. Are you all with me? The government is saying to the people of India, during your period of service itself, we want you to save your money. So do one thing, you maintain a provident fund account. Then you contribute something to that respective account. Your employer also will contribute some amount to that respective account. On your retirement, you can take a lump sum amount from that respective account. Just like recurring deposit. Have you heard about recurring deposit with the bank? You can contribute small amount. That amount at the maturity time will be a huge sum due to the power of compounding. Are you all here? Just like a recurring deposit, your employer will both contribute to a provident fund. That provident fund will grow. At the time of retirement, you can withdraw a lump sum amount from that respective provident fund. So, 3 types of retirement benefits we have discussed. It has no connection with Income Tax Act. Are you with me? Yes, because we are dealing with the taxability of gratuity, taxability of pension, and taxability of provident fund. So I simply explain what is what for a better clarity only. Are you with me? Rather than simply by hearting, this is the income tax implication of provident fund, pension, you should know what is what. Are you here? So you tell me what is pension? It's a monthly amount given by the employer to the employee. What is gratuity? Gratuitous sum, which is lump sum given by the employer to the employee. What is provident fund? Savings. I hope this much is clear. Now we were discussing about what? Commutation of pension. Yes or no? We were discussing about what? Commutation of pension. And if you are not a government employee or not a specified employee, then how do you claim exemption? First you have to check whether you are in receipt of what? Gratuity. If you are in receipt of gratuity, then your exemption shall be as follows. Exemption for what? Exemption for the commuted pension shall be as follows. Are you all listening? Are you all listening? So, if you are in receipt of gratuity, friends, how do you compute the exemption? Listen, the exemption shall be, can you read this? 1/3 of amount of pension which he would have received had he commuted the whole of the pension. What does that mean? Can you read that box again? Can you read that box again? Imagine a situation, say, I'm receipt of monthly pension of say 10,000 per month. This is my monthly pension. Okay, I commuted say 60% of my pension. I commuted how much? 60% of my pension. Are you all listening? Are you all listening? I commuted 60% of my pension and I've received 6 lakh rupees. The lump sum amount that I got is how much? 6 lakh. Okay, when I commuted 60% of my pension, the lump sum amount that I got is how much, friends? 6 lakhs. Now the monthly pension will be how much? Soon after commutation, how much will be my monthly pension? 40% of this. Why? Out of that 10, I have commuted how much? 60%. Are you with me? The 60% when I commuted, the actuary came and he valued and the total valuation figure was 6 lakhs. Don't think about how that valuation comes in because that is not our domain. Are you with me? Now, so I will receive 4,000 rupees every month from now onwards. Now the question is, when I commuted 60%, I've received how much? 6 lakh. I'm a person, I'm a private company employee in receipt of gratuity. I'm a private company employee in receipt of what? Gratuity. Now you tell me, how do you claim exemption? The amount that I've received is 6 lakhs. From that I can claim an exemption under section 1010A. I can claim an exemption under section 1010A. And how much is the exemption? Now read this. Exemption shall be 1/3 of the amount of pension which he would have received had he commuted whole of the pension. That means the exemption is not 1/3 of 6 lakh. If I had commuted 100% of my pension, what would have been the amount that I've received? That you have to compute. I commuted only 60% and I've received 6 lakhs. Yes or no? If I had commuted 100%, what would have been the amount that I've received? It is 10 lakh. How can it be 10 lakh? Listen, I commuted 60% and I got 6 lakh. That means this 6 lakh is 60% of something. So 6 lakh divided by 60%, it will be 10 lakh. If I would have commuted the entire pension, I would have received how much? 10 lakh rupees. You take the 10 lakh and take 1/3 of it. How much is 1/3 of 10 lakh? How much is 1/3 of 10 lakh? 3,33,333. This is my exemption. 334 or 333, no problem. This amount is my exemption. And how much is the remaining amount? 6 lakhs minus 3 lakh 33,000 triple three. Tell me how much is the exemption amount coming? 2 lakh 66,667. Yes or no? Yes or no? So the point is very simple. If you are a person in receipt of pension and you are in receipt of gratuity and you have commuted your pension and you are not a specified employee, then how do you claim exemption? Very simple. You compute 1/3 of the amount that you would have received have you commuted the entire pension. If you would have commuted 100% of the pension, you would have received 10. 1/3 of 10, that is 3 lakh 33,000 triple three is your exemption. The rest will be fully taxable. Are you with me? Are you with me? Yes. We have one more alternative under that. What is the second alternative? If the employee does not receive any gratuity, that means I am not a specified employee and I am not in receipt of gratuity. You tell me, how do we compute the exemption? Can you read this box? Exemption shall be half of the amount of pension which he would have received had he commuted whole of the pension. What does that mean? Instead of 1/3, you take half of 10 lakh. That will be rupees 5 lakh. Yes or no? Sticking on to the same example that I've told you, if you would have received gratuity, the exemption would be 1/3 of the amount that you would have received have you computed the entire pension. If you are not in receipt of gratuity, then you take half of the amount that you would have received have you computed the entire pension. Are you with me? Is that point clear? So let's summarize. Very simple. Pension can be divided into two. You tell me which all are the two types of pension. Number one, uncommuted pension. That means the monthly pension. Uncommuted pension shall be fully taxable in the hands of recipient, irrespective of the type of employee. Are you with me? Second type of pension is commuted pension. And commuted pension, if it is received by the employees of central government, local authorities, statutory corporation, members of defense services, fully exempted. If you are some other employees and in receipt of gratuity, then 1/3 of the amount of pension which you would have received had you commuted the entire or whole of the pension. And if you are not in receipt of gratuity, instead of 1/3, it is 1/2. Are you with me? Is that point clear? Perfect. Now there are certain other points in relation to this. We'll complete these other points and we will solve a problem as well. Are you all listening? Moving on to the first other point. Can you read the first other point? Judges of Supreme Court and the High Court will be entitled to full exemption of commuted pension. If you are an employee, not employee, you are a Supreme Court or a High Court judge, whatever pension that you are commuting shall be fully exempted. Are you with me? Just like our central government employees, if you are a Supreme Court or a High Court judge, whatever pension that you are commuting shall be fully exempted. Are you with me? Are you with me? Perfect. What is the second note over here? Any commuted pension received by an individual out of annuity plan of life insurance corporation from funds set up by corporation will be exempted. You are getting any pension from a LIC annuity plan, that is also fully exempted. Are you with me? Just like our LIC corporation have different schemes, you have joined in one of their schemes and now you are receiving a pension. That pension is fully exempted. That pension is completely what, friends? Exempted. Are you with me? Read that green box together. Any commuted pension. Together. Any commuted pension received by individual out of annuity plan of LIC from funds set up by that corporation will be exempted. That means whatever LIC's annuity plan pension you are getting, that shall be fully exempted. The income tax department have no plans to tax that. Are you with me? Now, there are certain exemptions for other persons as well. We will learn that and we will move on to the question. So, exemption under section 10 subsection 18. Let's see what exactly is that exemption. So, let's read it together. Any pension received by an individual is exempted from income tax if such individual was an employee of central government and state government, central government or state government, and has been awarded Param Veer Chakra or Mahar Veer Chakra or Veer Chakra or such other gallantry award notified by central government in this behalf. Say for example, you are a soldier and you died in a war. Are you all with me? The nation will admire you by giving all these kinds of chakras. Paramveer Chakra, Mahavir Chakra, Veer Chakra and similar gallantry awards. That is normally given to the army people and those people who are working with the armed forces. Are you with me? So if you are in receipt of these gallantry awards and you are receiving or your legal heirs or you directly is receiving any kind of pension, fully exempted. We are respecting you. So you are retired army person who got any of these gallantry award, all the pension that you are getting shall be fully exempted. Income tax department also shows some respect. We have no plans to tax you. Are you with me? Are you with me? Then what is next? In case of death of such above individual, any income by way of family pension received by any member of the family of such individual also shall be exempted. If you are a soldier, you are already dead, and you are in receipt of this gallantry awards, then department is saying that your family members who are getting the family pension, they also need not pay any income tax. They can also enjoy exemption under 10 subsection 18. Is that point clear? Great. Now there is a definition for the word family member. Let's see. Listen. So what is the definition? In relation to an individual, family member means, number one, spouse. Spouse means what? If the soldier is a lady, her husband is the spouse. If the soldier is a man, his wife is the spouse. Are you with me? Now, moving on. And children of that individual. Wife and children of that particular individual and their parents, brothers, sisters of the individual or any of them wholly and mainly dependent on that individual. In the case of parents, brothers and sisters, if they are dependent on that individual, they can also be called as family members. Are you with me? Are you with me? Perfect. Now, moving on to the next one. What is that? There is a CBDT circular that you should understand in relation to this. What is that? Entire disability pension, that is disability element and the service element of pension granted to the member of naval, military, air forces who have been invalidated out of naval, military or air force service on account of bodily disability attributable to or aggravated by such service would be exempted from tax. There is a thing called disability pension. Say for example, you are a person who participated in any war and you come up with a disability, you lost your hand, then you will be automatically expelled from the army. It is like that because you are not fit enough. Are you with me? If you are in the navy, military, etc., and you have a you have a disability while doing your duty, you will be automatically expelled from that respective service. But the government will give you what? Disability pension. That is comparatively a huge amount. That disability pension again shall not be taxable. That is fully exempted. Are you with me? We will discuss that again. The entire disability pension of any person which is a member of naval, military or air force who have been invalidated out of naval, military or air force service on account of bodily disability attributable to or aggravated by such service would be exempted from tax. You don't have to pay any taxes for the disability pension that you are getting. Are you with me? Are you with me? So the topic which we were discussing about is what? It is all about the treatment of pension, commuted pension and uncommuted pension. Hope it is clear for you.
Hello, my dear ones. This is CA Jose Kurian, and this video is to inform you about how to purchase our book as well as recorded lectures. For the book, you visit www.cajosekurian.com. Then you scroll down and you can see our both handbook as well as workbook for CA as well as CMA, Inter as well as Final. For the lectures, you scroll up, then click onto the classroom. In the classroom, you can scroll down and you can see all courses listed. We have CMA Final English as well as Malayalam, then CA Final English as well as Malayalam, then we have CA Inter English as well as Malayalam. Then select your course, make the payment, and you will get instant access. Alright, now what are you waiting for, friends? Subscribe now. All the very best, take care, and God bless you all.